meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL manage lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
At Tesco Mobile, we're here to help you stay connected. You can get the incredible iPhone XS with a dual camera for just £24.99 a month, which means you save £450. Join the 5 million customers staying connected with us. Search Tesco Mobile. Tesco Mobile. Every little helps.
Ends 19th of April. Was £37.49, saving £12.50 monthly over 36 months. Must continue usage agreement with Tesco Mobile for 36 months to achieve saving. Subject to status. Terms apply. See tescomobile.com/terms.
On this week's On the Media, we are awash in messages, but some messengers are more effective than others.
Ventilators, ventilators, ventilators. We need 30,000.
Meanwhile, some media outlets choose not to air the president's press briefings live, and media critics ponder what's the right balance between good information and all information. All that and more on this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak.
And it's 6:30 on Wall Street. Good morning. I'm Nathan Hager.
And I'm Karen Moscow. We're just about 4 hours away from the opening of U.S. trading. Let's get you up to date on the news you need to know at this hour. U.S. futures are rebounding from yesterday's sell-off as the coronavirus outbreak continues to spread.
Difficult days are ahead for our nation. We're going to have a couple of weeks starting pretty much now, but especially a few days from now that are going to be horrific.
The Pentagon is looking to provide as many as 100,000 military body bags for potential civilian casualties. Meantime, President Trump is weighing whether to stop flights from New York and other cities where the outbreak is most concentrated.
That is a calculation that we're looking at right now. We're looking at it very strongly.
No word on which cities would be affected or what the scale of any restrictions would be.
And we get more insight on the White House response to the virus today when we speak with Mike Pence. You can tune in for that interview with the Vice President at noon Wall Street time on both Bloomberg Radio and television. U.S. cases of COVID-19 now number 216,000 as deaths approach the 5,000 mark. For the very latest, we're joined live by Bloomberg's John Tucker in New York. John?
Yeah, Nathan, deaths in New York and New Jersey have doubled in 3 days. New York State now has 83,000 reported cases. In New York City, at least 1 in every 200 people is infected. Across the country, about 1 in every 1,500 has the virus, and worldwide, global infections are likely to reach 1 million by the weekend. In New York, I'm John Tucker, Bloomberg Daybreak.
All right, John, thank you. In New Jersey, cases now number more than 22,000, 350 deaths so far. We spoke with Governor Phil Murphy.
We're part of Metro New York, so we're living the same reality that New York City is. We're sort of all in this together. We're literally telling people, stay home, stay away from other people, no gatherings, period. And if you violate that, you will pay a big price.
Governor Murphy warns New Jersey will soon need more space to store dead bodies. He says they may resort to using refrigerated trucks to house the deceased.
And the pandemic continues to hit the economy hard. Today we get fresh numbers on Americans lining up for unemployment benefits. Forecasts call for weekly jobless claims numbering 3.7 million. Here with more is Bloomberg's Vinny Del Giudice.
Bloomberg Economics says the sharp increase in jobless claims implies an April unemployment rate approaching 5.5%. In comments this week, the president of the Federal Reserve Bank of Cleveland, Loretta Mester, said unemployment is poised to eventually top 10%, the peak of the last recession in October 2009. Vinny Del Giudice, Bloomberg Daybreak.
All right, Vinny, thank you. S&P futures up 44 points this morning. Dow futures up 399 now, and NASDAQ futures up 103. And straight ahead, we have the latest world and national news. And this is Bloomberg.
All right, Karen, thanks. It's 6:33 on Wall Street, and Michael Barr has more on how the coronavirus pandemic is playing out around the world. Good morning, Michael.
Good morning, Nathan. Governor Cuomo has ordered all playgrounds in New York City be shut down as the state's death toll from its COVID-19 outbreak is hovering around 2,000. Many of those deaths in the state, more than 1,300, are in the city. New York Mayor Bill de Blasio.
We have continued to get a very substantial supply of ventilators, but we still need 400 more to be in place by Sunday to prepare us for the week ahead.
Meanwhile, there's a grim guideline for EMS crews in the city. They are now being told cardiac patients who cannot be resuscitated in the field must be declared dead. Mayo Clinic's Dr. Vinayak Kumar says the new order is intended to protect healthcare workers.
When you're doing the CPR itself, the patient, you're pushing really hard on a person's chest. They're expelling some air in the process as well. So if they are COVID patients, then they'll be spreading it all around.
Los Angeles Mayor Eric Garcetti is now saying that everybody in his city should wear masks when going out. Bloomberg's Ed Baxter has the story.
The mayor says residents should not use medical-grade masks, which are in short supply and are needed by healthcare workers and first responders. Now, he says people who are performing essential tasks such as food shopping should wear homemade, non-medical face coverings or even bandanas, as people in other countries hard hit by the COVID-19 virus have done. Garcetti says the look would be surreal, but people will have to get used to it. He also said people should still stay at home as much as possible. In San Francisco, I'm Ed Baxter, Bloomberg Daybreak.
Michigan has the fourth most cases of coronavirus in the U.S. Governor Gretchen Whitmer.
We know we've got too little PPE. We have too few hospital beds. We definitely have too few ventilators. And we're worried about our frontline responders, our nurses and our respiratory therapists and our doctors.
President Donald Trump says he is considering ways to compensate healthcare workers with supplemental hazard pay as they grapple with the outbreak. The president says doctors, nurses, and other healthcare workers dealing with the pandemic are like warriors. They're like soldiers. Global news, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
All right, Michael, thank you. 6:35 on Wall Street. Time for the Bloomberg Sports Update. Here's John Stashower. Good morning, John.
Good morning, Nathan. First Wimbledon was in 1877. I didn't play during either of the world wars. This year will be the first peacetime cancellation. So no French Open, no Wimbledon. The U.S. Open, as of now, on from late August in New York. The indoor facility at the Billie Jean King Tennis Center is actually being used right now as a medical facility. But the UK getting hit hard by the virus, and there's word from Golf Digest that the British Open Golf for later in July will also not take place. Cubs and Cardinals were going to play 2 games in mid-June in London like the Yankees and Red Sox did last year. Those games obviously are off. MLB had previously scrapped April games in Mexico City and San Juan. Mets and Marlins were going to play there. Nets GM Sean Marks says the entire team is free of coronavirus symptoms. They completed a 2-week quarantine. Kevin Durant and 3 Brooklyn teammates had tested positive. 3 of the 4 never showed symptoms. When NFL free agency began, the Giants were said to be in pursuit of pass rusher Jadeveon Clowney. Maybe they will again now that Clowney has reportedly lowered his asking price. Wanted $20 million a year, now said to be more like $17 or $18 million. April 2nd, this date in sports history, 1995. The baseball strike ended. It lasted a record 232 days. It wiped out the 94 World Series. It ended with a ruling by New York Judge Sonia Sotomayor, who's now on the Supreme Court. At issue was the owner's desire to create a salary cap. They didn't get it. 25 years later, baseball still the only sport without a cap. John Stashower, Bloomberg Sports. Nathan?
All right, John, thank you. 6:37 on Wall Street, and the coronavirus pandemic continues to hit communities and the economy hard. Lives everywhere are being changed in homes and businesses all over the country. For a company the size of Bank of America, the shift is dramatic. Bloomberg's David Weston talked about it with Bank of America's CEO, Brian Moynihan. Let's listen to that conversation now.
So, Brian, thank you so much for joining us. This is an economic crisis, but I know you would be the first to say it is first and foremost a personal human crisis. Give us your sense of the overall crisis we're facing.
It's clear it's a healthcare crisis. There's this virus out there that we're all in a war, and everybody in the world has one common enemy, and that's to win the war against this virus. And now that is a humanitarian crisis, and that there's people that are hit by it and sick, and we got to make sure they're taken care of it. And then we got to take care of the rest of society so they don't get it, which means how you run your company, how you think about how you deploy your resources and stuff has changed dramatically over the last few weeks. Have we gone into social distancing, all to stop the virus and win the war on that? When we win that, the economic impact will be mitigated, and that's what you could see in the economy before it hit us, and that's what we expect to see in the economy after it hits us.
So how have you reordered your priorities at Bank of America? You just said that if you run a company, you have to reorder your priorities for this particular crisis. Give us an example of how you're reordering Bank of America's priorities.
We took a quick look and said, in the end of the day, our response has to be team-centric. In other words, protect our team, get our team in a position so they can support the customers, even if they're working from home. And it has to be client-centric, what we do for our customers, whether commercial customers or consumer customers, and ultimately, how do we help society? So if you think about the team, the number one issue was how can you do all the work that we do with this great team working every day across this wonderful platform, but do it in a way that's never been contemplated, with 150,000 teammates went from working in the office to working from home across 4 or 5 weeks.
Some economists are talking about now the possibility of demand destruction, being permanent reduction in consumption because of this crisis. As you look at it, is there a risk of that? How large a risk is there?
At the end of the day, one of the things that is great is if you think about the throughput of the U.S. economy, with the amount of stimulus, the amount of fiscal support that's coming, the amount of monetary support, if you look at economists with their 25% down in the second quarter and then working their way out, the sheer amount of dollars netted on $5 trillion quarterly economy, $20 trillion a year, is overwhelmed by the amount of support coming in the markets. All that is geared to getting us out the other side of this faster. There was no structural issues in the economy. It's a healthcare crisis, and I think if we mitigate that healthcare crisis, you will see on the other side of this, a rebound, and that's what our economists say. So as people have adjusted their second quarter down more due to the unemployment and new claims last week, what people are guessing will happen this week, there'll be a deeper downdraft. But most of the economists that I see and our internal economists believe on the other side is a reversion back to where the economy almost gets back to the same size, at sometime in next year that it was prior to this, which is a pretty fast turnaround. And so, I think that you're not changing anything fundamentally about the business cycle, about what's going on. You're saying if you get by this virus, it works.
And that's Bank of America CEO Brian Moynihan speaking with Bloomberg's David Weston. You can catch more of that conversation online at Bloomberg.com. S&P futures higher by 44 points right now. Dow futures up 400 points. NASDAQ futures a gain of 103 points. You're listening to Bloomberg Daybreak.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vattel Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor, is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
At Tesco Mobile, we're here to help you stay connected. You can get the incredible iPhone XS with a dual camera for just £24.99 a month, which means you save £450. Join the 5 million customers staying connected with us. Search Tesco Mobile. Tesco Mobile. Every little helps.
Ends 19th of April. Was £37.49, saving £12.50 monthly over 36 months. Must continue usage agreement with Tesco Mobile for 36 months to achieve saving. Subject to status. Terms apply. See tescomobile.com/terms.
Didn't get a seat on the bus? Get a front row seat with a Sky Store movie tonight.
For my whole life, I didn't know if I even really existed, but I do.
Stay in for an unforgettable night with Joker.
And people are starting to notice.
Watch the latest movie straight from the cinema.
When you bring me out, can you introduce me as Joker?
Joker, available now in Sky Store.
Not all heroes wear capes, but most wear tights. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis of the latest wrestling storylines, turn on the WWE podcast.
Big Steve edition.
Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
Because now on the show, everybody's kind of the same size, but as soon as I saw you, it's been...
For these and more, search sports and scroll down to the world of wrestling.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Connecting decision makers to a network of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report, coronavirus update. With Florida finally issuing stay-at-home guidance as the coronavirus continues to gather strength, something like 87% of Americans are basically remaining at home this morning. Bryn Gingras tells us the guidance does vary, however.
there are some areas around this country that are actually taking even stronger restrictions. For example, there are 4 cities in New Jersey that are on full lockdown this morning for the next week, meaning people can't even leave their homes except only for an emergency.
216,722 confirmed coronavirus infections in the U.S. this morning, 5,137 deaths reported. The Navy says nearly 3,000 sailors aboard the U.S. aircraft carrier Theodore Roosevelt will be taken off the ship by tomorrow. The Navy is struggling to quarantine crew members in the face of an outbreak on board. The Roosevelt is docked in Guam. Stocks took another battering yesterday on Wall Street, but pre-market trading has futures up over 1% across the boards this hour. I'm Michael Toscano.
Tom Keene and Jonathan Farrell.
Is that good for American finance?
What is happening with the headcount?
Right, where it counts. Bloomberg Surveillance, weekday mornings at 7 Eastern. On Bloomberg Radio. Bloomberg, the world is listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. S&P futures up 44 points this morning. Dow futures up 398 and NASDAQ futures up 100. The DAX in Germany is up 0.5%. 10-year Treasury down 2/30 seconds, yield 0.58%. And NYMEX crude oil jumping 10.1%, up $2.05 at $22.36 a barrel. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Thank you very much, Karen. New York is mobilizing thousands of volunteers to help deal with an outbreak that caused the statewide death toll from the coronavirus to double in 72 hours, now approaching 2,000. Today, Spain reported a record 950 deaths in one day, taking the death toll past 10,000. In Italy, with more than 13,000 dead, the most of any country, morgues have overflowed with bodies and caskets are piling up in churches. In tennis, Wimbledon has been canceled for the first time since World War II because of the coronavirus pandemic. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
Michael, thank you. We are live from the Bloomberg Interactive Brokers studios. We're at 6:48 on Wall Street, and now it's time to check what's going on in D.C., where the coronavirus fight continues. The Pentagon is now looking to provide up to 100,000 body bags for civilians. President Trump plans to meet with oil executives tomorrow as the global shutdown saps demand. And Joe Biden is offering to call the White House with advice after days of criticizing the president's response to the pandemic. Also making news this morning, China hitting back on a U.S. intelligence report finding that Beijing concealed the extent of its outbreak, perhaps intentionally. Let's bring in Greg Valliere, Chief U.S. Policy Strategist at AGF Investments. Good morning, Greg. Of course, we've heard members of the Trump administration in public accuse China of underplaying the extent of its outbreak. Now that we have this intelligence report, are we heading to a new war of words here? Should this change the U.S. response to the pandemic in any way?
It could very well, and it's not just Donald Trump, Nathan. Good morning. I think it's people in Congress as well. I think there's a widespread belief that they were not transparent, that they concealed things. I think the next part of this narrative is going to be a really careful look at our supply lines. Do we want to be that reliant on China, especially for medical goods?
So what could that mean in terms of the president perhaps using the Defense Production Act to encourage and order more domestic production of those much-needed supplies?
Yeah, that's an option. I don't think he's there yet, but I don't rule that out. I also would mention, in addition to China looking like a villain, there's another villain that everybody in Washington is starting to eye, and that's Saudi Arabia. You know, the fact that they went up to 12 million barrels a day in production this week is infuriating for a lot of producers, not just in the U.S.
And we're now hearing a lot more talk on that score about the president working with Russia to do something about the oil market. What are the implications there of more coordination between the U.S. and Russia as this pandemic plays out?
Well, Russia, as you know, has sent some aid to the U.S. I think it's kind of grandstanding. It's a little PR stunt by Putin. But I think that, Trump's relations with Russia are pretty good. I think the real question with with the Saudis is, would Trump want to jeopardize U.S. arms sales to Saudi Arabia? Would he call the Crown Prince in the next couple of days and say, knock it off, or we're going to take some action? That would certainly put a floor under the price of oil, but it could really sour our relations with the Saudis.
Do you think that we could see a deterioration of relations between the U.S. and Saudi Arabia? I mean, before this pandemic played out, of course, the relationship between President Trump and the Crown Prince, even on a personal level, was quite close.
Yeah, it really was. So this would be quite a shift. I think Trump will play his cards with the Saudis first to see if he can get them to back down. You know, my bottom line is that there probably will be a modest deal between Russia and Saudi Arabia, but oil producers cheat. They sometimes aren't very transparent about what they're producing. But the main point is this issue right now is more of a demand issue. It's not a supply issue. Demand is going to be terrible for the next several weeks.
I wonder what you make of how the stimulus has played out so far and the president's response just on a basic level. Has he been focused more on the supply side as opposed to the individual side? And how could that affect him politically?
Well, I think he wants to go bold, Nathan. I think he is determined to spend whatever it takes. The sky is the limit, as I've been saying for the last couple of weeks. Interesting, though, yesterday, Mitch McConnell and a lot of Republicans said, let's go slow. You know, Nancy Pelosi saying we could get a bill by late April, I think rubbed the Republicans the wrong way. I think we get a bill, but it may be June or July, and they've got to see how this third bill works before we start talking about a fourth. But the big story, the big investment theme clearly is going to be infrastructure.
I wonder whether there's going to be more pressure to act more quickly on that next round of stimulus, particularly as we await the next round of jobless claims figures coming out later today. I mean, those numbers are skyrocketing, and, you know, the Congress and official Washington is still moving, it seems, at its usual pace. Can that continue in a crisis like this?
Well, you make a good point. I think that the number today on claims will be horrible. Maybe tomorrow's unemployment number won't fully reflect what's happened. But I do think that the pressure is going to be on to do more. I think that there will be a fourth bill, maybe even a fifth bill. But the Republicans, led by McConnell, I think want to go slow on this next measure.
What do you make of the president's leadership up to now? The tone that he's striking, the type of measures that he's encouraging Americans to put out there. I wonder what you make of perhaps the guidance that face masks might need to be worn in public and the shift there.
You know, it's been mixed. I mean, he contradicts himself. You hear one message one day, another message the next. I would give him credit, though. He clearly is listening to the scientists. That's crucial. And even though he likes to have a happy spin, he's deferred to them. I think that's important. That's been a highlight. The low light for me was having the My Pillow guy at the press conference. He's sort of a huckster. In my opinion, that didn't do the president any good. It wasn't a serious act, in my opinion. But, he is listening to the scientists, and I think some of his people, in particular Pence and Mnuchin, are doing a pretty good job.
All right, Greg Valliere, always good to get your insights. Thanks again for being with us. Greg Valliere is Chief U.S. Policy Strategist at AGF Investments. And again, we will hear more of the White House response to the pandemic. Vice President Mike Pence sits down with Bloomberg Radio and Television at noon Wall Street time. Karen.
Nathan, thank you. It is 6:54 on Wall Street. It's time for the Bloomberg Small Business Report with John Tucker. And John, good morning.
Karen, good morning. There may be no harder time to be a small business than right now. The coronavirus pandemic has stopped family-owned companies across the country in their tracks, including 305 Fitness. They run dance cardio classes in the Greenwich Village neighborhood of Manhattan. Sadie Kurzman is founder and owner of 305 Fitness. Sadie, tell us about the outlook for your business right now.
This crisis has impacted the business really heavily. We are a dance cardio workout. It's a group fitness experience. It's a boutique fitness setting. Formerly, all of our revenue was coming from people buying class packages and their memberships and showing up to these pretty packed, sweaty dance parties. We obviously, in this time of coronavirus epidemic, cannot host our classes in person. So, we're losing 98% of our revenue. People are purchasing apparel online and they're tuning in to our classes online, but our ability to actually be able to make money like we did formerly as a small business for now is definitely put on pause.
In terms of employees, how many workers do you have? What's happened to them?
So that's been majorly disappointing, majorly upsetting for me as a founder. I have worked for 8 years to convince so many people to be part of this vision. We had grown the team to 25 full-time employees, about 300 part-time employees of instructors, DJs, front desk managers. So we had grown a pretty sizable family there. And we were especially growing really recently. It was in the past 3 months that we were growing a ton and opening much more studios and signing a new lease to a new office and opening up our 7th studio. So all of that definitely came to a crashing halt. It's very, very challenging for artists, fitness instructors, DJs, people that we were supporting financially. Right now, the sad truth is that without revenue coming in the doors, the best thing that we can do is walk them through how to file for unemployment, give them all the resources that we can find to help them get back on their feet, and then direct our clients to support their workouts online, their live streams, their DJ mixes. But the sad reality is that we simply don't have more income to give with no revenue coming in through the doors.
Thanks to Sadie Kurzban, the founder and owner of 305 Fitness. And we'll continue bringing you stories of small businesses working to stay afloat in this trying environment every day at this time right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Small Business Report. Karen.
John Tucker, thank you. And futures this morning are on the rise. S&P futures are up about 41 points. Dow futures up 369. NASDAQ futures up 89. The DAX in Germany's up 0.4%. CAC in Paris up 0.9%. And the FTSE 100 is up 0.7%. The Nikkei 225 in Japan fell 1.3%. 10-year Treasury down 1/32. The yield 0.58%. The yield on the 2-year 0.22%. And NYMEX crude oil jumping up 10.25%, up $2.07 at $22.39 a barrel. COMEX gold is up almost 0.8%, up $11.90 at $16.03.30 an ounce, and the euro 1.0921 against the dollar. Bloomberg Surveillance is straight ahead with Tom Keene and Jonathan Farrow, as well as Lisa Abramowitz. And for Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL managed lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
This week at Tesco, large Easter eggs are 3 for £8. And we've got a large choice too on all your favourite brands, including Terry's Chocolate Orange, Cadbury's and Maltesers. At 3 for £8, why shell out more? Tesco. Every little helps. Available in the majority of larger stores and online. Delivery charges may apply on the 13th of April.
Can you make a call given the data?
Which segments of Alphabet's business are most likely to come under scrutiny?
Get all the pieces.
They're getting mixed signals from governments.
He's failed to gain traction.
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is is Bloomberg Surveillance, Economics.
In this cycle, we've dealt with a lot of shocks.
It's important to understand what the Fed can and cannot do.
Finance.
There's no asymmetry left in markets. It truly is a zero-sum game.
We will get slower growth. I mean, let's not get confused about that.
Investment.
Very few investors want to own any energy to begin with.
There's a great deal of uncertainty. People are trying to hide in safe places.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance. Coming up on the program, jobless claims seen rising towards an ugly 4 million. Wall Street banks getting the nod to extend leverage. And China looking set to build up state oil reserves. From the Bloomberg Interactive Brokers Studio, hello Thursday. Here is your Thursday morning price action. 2 days of losses. We erased some of that in the equity market this morning. Equity futures are positive by 1.74% on the S&P 500, up around about 42 points after losses of almost 6% over the previous 2 days. In the bond market, no big moves to speak of. Yields unchanged on 10s at 0.585% after a big day of gains in the Treasury market yesterday. In foreign exchange, dollar strength turns to dollar weakness. And in the commodity market, we have a little bit of a bounce here. Crude up by 11% on Brent, up by more than 10% on WTI. $22.40 is your price right now on WTI crude. Guys, the labor market has been badly hit. The data speaks for itself. A little bit later this morning, Tom Keene, jobless claims expected to rise to close towards 4 million. An ugly statistic with a story of pain, many stories of pain behind that number.
It is a time of unknown unknowns, and this is one of the few knowns because it's countable, folks. They walk into the door, they do the online bit with the claims department, and so it's actually countable. And John, this will be the second week. I'm really big on moving averages on this. I've got to get out 2 weeks, 3 weeks, even 4 weeks of claims to begin to look at the trend. But you've seen the research work. People are looking at 10 weeks that could go on like this.
Not pretty at all. And Lisa, there is little visibility over how much is getting processed and how quickly. If you look at the range of estimates for that number that comes out at 8:30 Eastern time, the range is remarkable. The low is 800,000. That's your low estimate. Your high is 6 million.
Really, the theme has been flying blind. Every economist we speak to, they say they are flying blind right now. They are not sure how deep this is going to be, how deep this already is. I think, John, you said something earlier that I thought was really interesting, that there are no big moves to speak of in the bond market, which is actually telling. Financial stress seems to have eased, and now the question really is about the economic impact and the stories of pain that you're talking about. The key issue for me is that the checks have not been in the mail fast enough, and you're already seeing companies continue to furlough and lay off employees, and this is really the problem, and we're going to see that later today.
We'll get a view on the fiscal effort a little bit later this morning. Looking forward to catching up with Jason Furman of Harvard University. He'll be joining us at 7:45 Eastern Time. Really pleased to say that joining us now is Matt Hornback, Morgan Stanley Global Head of Interest Rate Strategy. Matt, always fantastic to catch up with you, and great to lean on the expertise of your economic team led by Chet Anaya and Ellen Zettner. Last week, Ellen Zettner was about as close as you could get to nailing the estimate for initial jobless claims. Walk us through the work that you guys are doing to gauge just how bad the damage is being done to this labor market in America.
Yeah, John, thanks for having me on. It's nice to be here. Let me just start by saying that our economists, whenever they look at these types of numbers, they're trying very hard to do the groundwork in order to come to an estimate that is, not really hyperbolic, but trying to get to the real true sense of what's going on. And they do this with unemployment claims by going state by state around the U.S. To figure out what is likely to happen in each state. And then, of course, they aggregate it. So it's very much a bottoms-up approach, which is, I think, one of the reasons why they got so close to the actual number last week. By using the same techniques, the number they're coming to for this week is about 4.5 million. So that would be on a cumulative basis, 8 million jobs, lost over the course of the past 2 weeks, which, of course, is a record.
Matt, what do you see? And part of your claim is great acuity in your research reports. Tell our audience what the break-even market tells you right now, this ballet between inflation, the economy, the different parts of the yield market. What do the break-evens say right now?
It's really interesting when you look at a market that is supposed to be as liquid as the Treasury market, because you expect it to give you fundamental signals that make sense, that are meaningful, that all these investors who come together in these markets are on the same page. And what we've seen in the Treasury market for the past 3 weeks, and in particular in the break-even inflation market, the TIPS market, is that oftentimes the messages are driven by desperation, by flows that aren't necessarily driven by fundamental views, but just by the need to raise U.S. dollars for safety. And when you look at the break-even market, at one point over the course of the past 2 weeks, break-even inflation rates were suggesting that there was a 40% chance of cumulative deflation in the next 5 years. Now, keep in mind that in the wake of the great financial crisis a decade ago, we never even had a year of deflation. So it's important to understand that it's not as if the market was telling you that this was going to be 5 or 10 times worse than the great financial crisis. It was that people were desperate to raise dollar cash, and they had to sell what they had in their portfolios. And a lot of investors over the past 3 or 4 years were making off-index bets in the TIPS market. So those off-index bets are usually the first ones to go. And of course, you saw the impact on break-evens. Where do we sit today? We like break-even inflation in the U.S. We like owning TIPS versus nominal treasuries, because we finally, after years, we finally see value in this market. A 10-year break-even inflation rate at 90 basis points is at least 40 basis points below the levels that we thought were cheap, within the past couple of weeks. So we're talking about real levels of value here in the break-even inflation market.
All right. So, Matt, you talk about the desperation with people just looking for cash, but speak to the desperation then in the fundamentals, right? What we are actually looking at that might be sort of the basis for these deflationary fears. 4.5 million claims. What kind of unemployment rate are we looking at for this year?
Well, we're going to be over 10% on our economist numbers. And I think the exact level of where that unemployment rate gets is less important to the market than sort of when the peak occurs, right? And in some sense, this is an unprecedented shock that we're experiencing, not only in the United States, of course, but globally. And so I think most investors understand that the economic data is going to look very bad. Which perhaps is an understatement in and of itself. But nevertheless, most people understand this. What people are trying to get their head around is what does the recovery look like, and when does it start? Is the second quarter of the year truly going to be the nadir in the U.S. economy and the global economy, which is what our economists believe, and I think a lot of people out there are thinking.
Yeah.
What does the recovery look like? Is it V-shape, U-shape? People are now using the Nike swoosh as a reference to what kind of shape the recovery may look like.
I'm not sure Nike wants to brand this particular recovery, Matt, because it could be really, really difficult. We have no idea how consumers feel when they come out the other side of this. We have no idea what the state of SMEs will look like. We have very little idea on how large businesses will right-size their workforce to adjust for what could be a very, very different demand picture. What we do know is that the Fed's balance sheet is getting bigger and getting much, much bigger very, very quickly. It expanded $600 billion in just the past week alone, Matt, and I'm trying to understand how big that balance sheet can get. Are there any limits, do you think, on the FOMC at the Federal Reserve to how big they'd like to see that balance sheet get?
So I think the way they're approaching it is less about a total size, because at this point it is an educated guess. I think the way they're thinking about it is what do they need to do in order to achieve their goals? And I think their first goal here is market function and market liquidity. How do they get these important bond markets to behave more normally? They don't know exactly how much it will take. Eric Rosengren of the Boston Federal Reserve suggested yesterday that it might take several more weeks. So they don't know exactly. They're going to take it day by day and week by week, but that's goal number one. Goal number two is then how much do they need to do in order to get financial conditions easy enough to support the economic recovery? Because ultimately they've got congressionally mandated goals of full employment and stable prices around 2%. They don't know exactly how much they have to do, but here's what we think. At Morgan Stanley, our estimate is that the Fed will have to increase its balance sheet by $4.5 trillion since the beginning of the year. In other words, we're looking at basically a doubling of the size of the Fed's balance sheet from where it got to post-crisis. And that is, it sounds like a large number, but to the point you just raised, they've already done about, a fourth of that. So it's early days, and we think the balance sheet has a ways to go.
It's happening quickly. Matt, we appreciate your time this morning, and send my thanks to the team. A fantastic job covering the high-frequency data over the last couple of weeks. It's really, really good to see Wall Street at work and trying to bring us clarity on some really complex issues. Matt Hornback there of Morgan Stanley. Let's get you some news, some headlines worldwide from New York. We can do that with Michael Barr. Good morning to you, Michael.
Good morning, John. Lisa, Tom. The White House says a coronavirus antibody test could be available within this month. Dr. Deborah Birx says the test could help identify frontline medical workers who may have had the coronavirus and not know it.
And I think really being able to tell them the peace of mind that would come from knowing you already were infected, you have antibody, you're safe from reinfection 99.9% of the time. And so this, I think, would be very reassuring to our frontline healthcare workers.
President Donald Trump said his administration is considering ways to compensate healthcare workers with supplemental hazard pay as they grapple with the outbreak. President Trump, during a White House briefing yesterday, says doctors, nurses, and other healthcare workers dealing with the pandemic are like warriors. They're like soldiers. Meanwhile, President Trump is holding back on declaring a nationwide stay-at-home order, saying the needs of some states are different than others.
You have to give a little bit of flexibility, but if a state in the Midwest, or if Alaska, as an example, doesn't have a problem, it's awfully tough to say, close it down. So we have to have a little bit of flexibility.
Florida Governor Ron DeSantis has decided to issue a statewide stay-at-home order as the number of coronavirus cases continues to climb across the country. It comes as a pair of cruise ships carrying hundreds with the virus remain off the coast of Florida. It's unclear when or if they'll be able to disembark. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Tom, Lisa.
Michael Barr, thank you, sir. Thank you very much. That's your news, your headlines worldwide this morning. Here's your price action. It improves after two brutal days on Wall Street, with the S&P 500 down by almost 6% over the previous 2 days. This morning, positive 35, call it 36 points on the S&P 500, up by 1.5%. In the bond market, very little price action to speak of this morning. Yields come in big time yesterday. They settled down just south of 60 basis points on a US 10-year yield. A little bit later this morning, in about 1 hour and 15 minutes, we will have an initial jobless claims print in the United States of America. It is not expected to be pretty once again. In foreign exchange, dollar strength gives way to some dollar weakness. Sterling positive by 0.6% this morning. From New York, alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg Surveillance.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management.
Management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Influential. This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
The sports world is full of inspirational stories of heroic figures. It also has its fair share of shady characters. For detailed retellings of the darkest sagas in sports, explore TuneIn's documentary podcasts, like 30 for 30's The Sterling Affairs, about the scandalous life and times of the former Clippers owner, Donald Sterling, and Gladiator, which follows Aaron Hernandez's transformation from Super Bowl star to convicted murderer. For these and more, search sports documentaries on the TuneIn app.
Next time on the New Yorker Radio Hour, I'll talk with our Washington correspondent about the many political battles being waged in the Capitol over how to deal with the new coronavirus.
You couldn't imagine a president personalizing a crisis with a virus, but somehow that's where we are.
Susan Glasser. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, watching shares of Boeing this morning. They're up 3.2% in early trading. It is initiating a voluntary layoff plan that allows eligible employees who want to exit the company to do so with pay and benefits. This move aims to reduce the need for other workforce actions. U.S. stock index futures, meanwhile, on the rise following another session of steep declines. And European stocks, they're higher right now as well. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 37 points, Dow futures up 337, and NASDAQ futures up 83. The DAX in Germany is up 0.3%, CAC in Paris up 0.9%, and the FTSE 100 up 0.6%. 10-year Treasury down 430 seconds, yield 0.59%, yield on the 2-year 0.21%. NYMEX crude oil up 9.5%, up $1.93 to $22.24 a barrel. COMEX gold is up 1% or $15.40 at $16.0650 an ounce. The euro is at 1.0916 against the dollar. The British pound 1.2433, and the yen at 107.39. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. That's the price action a little bit later this morning in 1 hour and about 11 minutes time, where we'll have some data in America for you. Initial jobless claims. The median estimate in our Bloomberg survey, 3.7 million. Tom, the range of estimates, we touched on this about 20 minutes to go. The range is really wide. The high estimate is 6 million. The low is 800,000. Yeah. We know there's damage done to the labour market. We're trying to understand how much.
Let's frame for those that are not sophisticates here as we start 5 things you need to know on this. John, a miracle was 200,000, 205,000. A turnaround was 218,000. Then we balloon out to 700,000, and then out to that historic 3 million statistic the other day. And I'm seeing different, 5, 6, 7 weeks we do this. It's going to add up to 10, 20 million people.
This is what happens when you slam the brakes on the US economy with nowhere to go. And this is also what happens when the sequencing of the fiscal package is out of sync with what's been happening with the economy. If we'd had this plan earlier and then things shut down, we would have had the help there ready for SMEs to keep people on the books. And what's happened is that a lot of this has come a little bit too late. I welcome it. We all welcome it. But it hasn't actually hit the economy as yet. These SMEs have already started laying off people. And people are already going without a job.
Resoundingly, we've learned that it's not there when we need it. Lisa, there is a distinction here that it seems to be hugely a service sector layoff.
Yeah, well, I just want to give a little perspective going back to 2009. At the peak of the crisis, the unemployment rate topped out at 10%. 10% is the lowball figure that we're getting for the unemployment rate over the next few months. And I think that this is a really important thing to realize when we head into the next period. The question is, how much can this labor market come back? And I think that that's really the big concern right now. Yes, we're getting a demand side kind of cannibalization. Can we get it back up quickly?
I read every word of Bruce Kasman and Joshua Lupton at JP Morgan today, and they go to 20%, 2-0 on the unemployment rate briefly. 20% decline, I should say, on non-farm payrolls. John, EM, what a mess.
Really tough, and tough for a whole host of reasons. It is so difficult for emerging markets to respond to this situation. We've talked about the fiscal aid package coming out of Washington. Let's reflect on what we've discussed many times on this program. The luxury of a developed market is that when things get bad, yields go lower on sovereign bonds. When things get bad at emerging markets, things go the other way. And that makes it really difficult for governments to respond with fiscal aid. And fiscal aid is everything right now when the economy is shut down. And what you really want to see is a risk transfer from private balance sheets, consumers, companies, onto the government balance sheet. And in EM, it's really difficult to execute.
Lisa, what I see in EM that's so important is the idea of ex post, ex ante, which is an IMF and other institutions, but particularly the IMF, that is there when crisis has occurred versus trying to get out front. That's a really difficult thing to do institutionally.
Yeah, it's tough because a lot of these countries have been borrowing an incredible amount of debt, and it's in foreign currencies like the dollar, which just puts an even bigger stress. And just to give you a sense of the flight of capital out of these countries, investors pulled an unprecedented $83.3 billion from emerging market bonds and stocks in March. This is exceeding 2008, 2013, 2015 with the devaluation scare with the Chinese yuan. And you have to wonder, how can they shore up their countries right now when the developed market is busy?
John, explain this, because I know you have in treatment sometime next year the real yield in Turkish lira. Most of these countries have two bond markets, don't they?
What, local and dollar denominated? Is that what you're touching on, Tom? Yeah, and to Lisa's point, many people have been borrowing in dollars, and we've reflected on this. The Bank of International Settlements has written about this almost every single quarter. There's been a massive climb in dollar-denominated debt, so when things get difficult, it gets harder to pay that debt back.
It's not just dollar-denominated debt. There's also been an incredible surge in borrowing from China. And this has not been reported in terms of official statistics, but people feel like this is actually accelerating some of the crises that we're seeing, particularly in Africa.
In oil, we're all over the map. We get a $2 rally, crisis over. Yet, Morgan Stanley, we talked to, I believe it was yesterday, modeling out oil into the teens, or even, dare I say, mentioned was $10 a barrel. John, it's really two views, isn't it?
Oh, look, Tom, with the storage situation as it is, if you keep on pushing supply, at some point you start thinking about breaching storage. Arguably, we're already thinking about those issues right now. But let's take the supply issue away. Think about what's happened to demand. Demand has totally collapsed in some of the biggest economies on the planet, even if we address the supply issue, which is what some people think might happen between Russia, the Saudis, and the United States as the go-between, even if we address that, we're not addressing what's happening with demand. We're not addressing what's happening with fuel demand for the big airlines, which is shut down and may not come on that quickly as well. They're all issues that are playing into a $20 crude price.
Yeah. Let us turn. We haven't done this, folks, in a number of days with this crisis and the great effort of our team to put all of this together remote on this beautiful day, I should say, in New York City amidst all this grimness. John, does Liverpool get a trophy?
I don't know. There's a huge debate about it. And look, I'm aware, you're aware, we're all aware that this is a fringe story at a really, really difficult time. But I know it's something that a lot of people are interested in. I agree, Tom. The sporting world is something that people like to be distracted by. Wimbledon got cancelled yesterday, so there will be no Wimbledon tennis tournament.
John, stop. Let's rip up the script. John, what's the significance of Wimbledon being cancelled for London?
We haven't had that cancelled since World War II.
Yeah.
That's how unprecedented that is. And for anyone in the end of their career, and I'm thinking of Roger Federer, not to be able to play this year, another year in your career, it just gets a little bit more difficult. I know we've got a lot of listeners that love tennis, particularly Roger Federer. To not play that Wimbledon, it gets difficult.
Have you done the strawberries and cream thing, John?
I've never done it. I think that would suit you more than it would suit me.
Just for our listeners who may not know what that is, can you explain?
Strawberries and cream.
You go to Wimbledon and you have strawberries and cream between games, and John wears that white sweater with the red and the blue, trim. And,
sounds like you've done this before.
John,
sounds like you've done this before.
This. If you went to Wimbledon, you'd wear flip-flops.
From New York, you're listening to Bloomberg Surveillance. We are live on
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Message and data rate may apply. T&C and privacy terms can be found at bevel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
This is the sound of diarrhea flushing your day away. Don't let it ruin your day and leave you feeling drained from dehydration. Diorolite is scientifically proven to help you recover from dehydration faster and better than with water alone. So don't forget your Diorolite today. Available at your local pharmacy or supermarket. Always read the label.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio, 2 hours away from the opening bell in New York after a two-day losing streak on the S&P 500, a two-day loss of almost 6%. We bounced back a little bit, up 39 points on the S&P, positive 1.59%. In the bond market, we settled down after yesterday's big bid. We came in 8 or 9 basis points on a 10-year in yesterday's session. A little bit of a lift this morning, up by a single basis point to 0.6% on 10s. And in foreign exchange, we give up some of that dollar strength as the session grows older, just showing a little bit more dollar weakness. The pound up by 0.6% against the US dollar. The pound against the dollar cable approaching a 125 handle after being down at 114 just a couple of weeks ago, Tom. Big turnaround in foreign exchange on some of these currency pairs in G10.
Some of them in G10. I'm worried about G181, the IMF currencies. And yeah, there's some improvement there. You see it in Rand, you see it in Indonesia as well. But really, I'm completely focused, John, on these EM ramifications as we await for that claims number here in 1 hour.
1 hour away, and the expectation is a lift to 3.7 million. That's your median estimate. The range is massive. Looking forward to bringing you that number and trying to understand the complexities behind it. A lot of pain for a lot of Americans as they reach for initial jobless claims. We'll get to that a little bit later. 1 hour away. I'm pleased to say that we can join Laurie Calvasina now, RBC Capital Markets Head of US Equity Strategy. Laurie, great to get you on this program, as always. Trying to gauge a couple of things in this market, and one thing you can really help us with today is sentiment. How washed out is sentiment at the moment?
Well, unfortunately, I don't think it's washed out enough, John. We actually just released our investor survey this morning that we do every quarter, and we ran this from March 25th to 31st, so it's pretty fresh as we can get. We actually were stunned to see that those describing themselves as bullish or very bullish rose from 51% in December to 58% in March. Now, that's on a 6 to 12-month time frame, but what's really stunning about it is that it's the highest we've seen since we started our survey in the first quarter of 2018, and it's the exact opposite of what happened back in December of 2018 when we saw the bear spike and the bulls ease back. So, I've talked to a lot of investors who are, running down their shopping lists with me, talking about how this is a buying opportunity. And we saw that in the survey results, that I just don't think people are bearish enough.
All right. So walk us through the idea of why they should be more bearish, given the fact that the U.S. government, that frankly governments around the world are pouring money into the economy to try to sustain it, and then beyond with a potential infrastructure program. Isn't that enough to get things back on track and get these valuations to look better to you?
Well, one thing we saw was that there is clear faith in the Fed, and I do think that faith is deserved. We found that 87% think monetary policy has been good or very good, and there's also a lot of faith in the fiscal response so far. But I think what concerns me a little bit is that if you look at the economic scenario that people are assuming, there's a belief that the economic damage from the crisis will be fairly contained and fairly manageable and fairly short in duration. And so I think the real risk to markets going forward is, do we test some of those assumptions? Now, we've seen a number of firms around the street come out with some pretty scary 2Q GDP numbers, and thankfully I'm not an economist, so I don't have to make that call. But we did see that about 2/3 of our survey respondents think that GDP is going to be contracting by 20% or less. That assumption is starting to be tested by the market. So my concern is that some of these assumptions on the economic side will be called into question.
Look, Laurie, it where we are, and it's great to have a 6 to 12 month visibility. As we talked to Abby Joseph Cohen yesterday, let me ask you the same question. What is your counsel for institution or high net worth looking out 3 years, or dare I say 5 years?
So, in terms of what we want to do, in terms of what we want to buy, we've been telling people to really have a balance. So we think you should have some defense in your portfolio. We think you should have some long-term growth in your portfolio. And we do think you should have some cyclicality, but we're very picky about what we're choosing on each of those. So I would say pick your spots carefully, be exposed to equities, but be prepared for some additional turbulence in the near term. That's really how we think about it. And one of the reasons why we're trying to really emphasize that there could be additional turbulence near term is we want people to be prepared for it. We do want people to be able to use it as a buying opportunity, but we think it's important to understand that there are still risks out there in the short term.
Risks out there that are very hard to quantify or get your hands around, given the fact that a lot of this is an epidemiological issue, it's a health issue, and it depends on a lot of different factors. How do you even go into figuring out what to consider when determining whether we're hitting a bottom, aside from just pure sentiment?
So, sentiment, I think, is one of the best things we can look at. I sort of laughed when I looked at the survey results this morning because we saw a huge number think that valuations are attractive. And people are telling me they have no idea what the earnings outlook is. So how do you know if valuations are attractive or not? One of the things we did ask in the survey was, what does the market need to see to stabilize? Just regardless of what your view is, what does the market need to happen? And one of the things we saw loud and clear in the survey results is that people think the virus is really the key. It's taken center stage. So 78% told us that a decline in new cases in the U.S. is needed for the market to stabilize. Now, I'm not a doctor. I sympathize with John when he doesn't like non-doctors talking about medical stuff. So I'm not going to do that here because I think he's dead right on this. But I do think it's important to understand that a lot of the rally we had towards the end of March was a positive reaction to what was coming out of Washington, to the actions the Fed was doing, and that was all very well and good and deserved. But our survey this morning told us investors don't think we need to really see additional fiscal response to get the market to stabilize, but they sure do think that we need this virus outlook to improve. Now, the thing that also, concerned me a little bit is that 54% also said for the market to stabilize, we need significant progress on new drugs to treat the coronavirus and or a vaccine. I'm not going to speculate when that's going to happen, but just understand that the virus and that path of that virus and all the uncertainty there, that's pivotal to markets near term.
Laurie, you've helped me with many things over the last couple of weeks, but one thing in particular stands out: how to tailor the message for retail. This is an institutional audience that you've been speaking to, and I think for retail at the moment it's a really confusing time because I get many people on my programs, including on this program with all of us, talking about the opportunities out there, time to add a little bit more risk. How do you tailor the message for retail at a really confusing time?
I think that we do, what we do want people to generally do is just to sit tight, to be prepared, to understand that this is a bit of a roller coaster and we're going to have upswings and we're going to have downswings. I used an analogy at the beginning of the year when I was talking about the turbulence we expected in the market. And I said, imagine that I'm the airline pilot. I'm coming on. I'm telling you that we're going to hit some bad weather. Please don't jump off my plane in the middle of the flight. We are going to get to our destination. I still do firmly believe that. Unfortunately, the turbulence has just been a bit worse than we expected, and it could get a little bit worse than it's been.
I was pretty impressed, Lori. I had to buy some bow tie wax yesterday from Amazon, and usually it's like next day delivery.
That's
instead it's 4-day delivery.
Wait, hold on a second, Tom. You got to elaborate.
What's bow tie wax?
You put it on your bow tie and it keeps the little fuzzies down so
Seriously?
you don't see them protecting.
Is this a thing?
No, that was a thing.
No,
bow tie wax. So anyways, it's a 4-day delivery, which I thought was pretty extraordinary. Lori, Amazon's got to be the mother of all buys.
Well, look, one of the things we've talked about, and I can't talk about individual stocks, but we have, said investors need to really think about how consumer habits are going to change, and there will be some good changes for some companies, and there will be some bad changes from other companies. But my personal view is, when we think about sort of the tech space and sort of this internet space, we think that there are sort of heroes that are emerging in the investment world. And sort of thinking about the tech companies, the banks, the healthcare companies. These are the ones that are really, sort of coming to the rescue to help this economy muddle through. And when I think back to past crises, the tech bubble, the financial crisis, sort of how these companies step up, if they're viewed as being part of the solution or part of the problem, does have longer-term investment implications.
Nice brief. Lori Cavicina, thank you so much. RBC Capital Markets. The Bloomberg NJIT STEM report is brought to you by New Jersey Institute of Technology, designated an Innovation and Economic Prosperity University for its support of business and community development. More at njit.edu. Here's Bob Moon.
Tom, Lisa, Jonathan, good morning. Here's what's making news in science, technology, engineering, and math. Late last year, long before people had heard of the new coronavirus, scientists in Germany sprang into action to develop a test for the virus. They had one by mid-January, and labs around the country were ready to start using it just weeks later. That quick work stands in stark contrast to delays and missteps in the U.S. and other countries. And experts say it could explain one of the most interesting puzzles of the COVID-19 pandemic. Why are people with the virus in Germany currently dying at much lower rates than in neighboring countries? There may be many factors at play, but experts said early on that the fast and widespread testing gave Germany an edge. It's estimated that Germany is now capable of conducting up to 500,000 tests a week. The accuracy of weather forecasts is at risk from the coronavirus pandemic. The World Meteorological Organization says it's concerned about the quality and quantity of weather observations as the pandemic affects everything from weather-related information collected from commercial aircraft to operation of satellite systems and maintenance of weather stations on the ground. Accurate weather predictions are critical for commodities markets, including agriculture, natural gas, electricity, and coal. Farmers and food crop traders rely on forecasts for planting schedules and prices. Gas markets are particularly sensitive to weather data to help predict demand. That's the Bloomberg NJIT STEM report. Tom, Lisa, John.
Bob Moon, thank you, sir. Thank you very much. Let's get you some news, some headlines worldwide. Let's say good morning to Michael Barr. Good morning, Michael.
Good morning, John, Lisa, Tom. Around the world, the race is on to protect people against becoming infected by unwitting coronavirus carriers. A new study shows the illness may be spread by people without symptoms. Governments are now pitted against each other to buy protective gear and medical equipment. In New York State, deaths doubled just in 72 hours, now approaching 2,000. Spain reported its record 950 deaths in 24 hours today. The World Health Organization said more than 95% of people who have died of coronavirus in Europe have been older than 60. President Trump at one time said the coronavirus would blow over, but is now using national resources into battling the virus. The president says what changed his mind was the seriousness of how the virus spreads and people dying from it.
Looking at the way the contagion, it is so contagious. Nobody's ever seen anything like this, where large groups of people, all of a sudden, just by being in the presence of somebody, have it.
Joe Biden is criticizing what he calls President Trump's late response to the coronavirus pandemic. The Democratic presidential frontrunner made a virtual appearance with Tonight Show's Jimmy Fallon. Biden called out the president's past promise that anyone who wants a test for COVID-19 can get one.
The president talked about having 4 million tests available. We're nowhere near that. The president talked about being in a position where we're going to have every Walmart parking lot and Walgreens, et cetera. We were going to have drive-through testing, et cetera. Well, there's now, after he announced that a couple weeks ago, 5 in America. 5 are open.
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Tom, Lisa.
Michael, thank you. Tom, how much is bow tie wax? I'm on Amazon now. And
it's $39.
You found it?
Yeah, I found it.
I couldn't find it.
Well, I'll be honest. I get the French. It's more expensive.
French wax.
Bloomberg takes care of me, and so I get the French bow tie wax, and it works with the Hermes bow ties particularly. It
sounds like
it doesn't stain the silk.
Really, really struggling in this really delicate moment worldwide, looking for wax for Hermes bow ties.
Can I just say, it's a beautiful, beautiful day here.
Good subject change.
Tragically, with the traffic so much less, I can see New Jersey like I've never seen it in my life. Newark is like 10 miles closer than it usually is.
Tom, the important things in life, hey? Tom Keane there, alongside Lisa Bravitz. Headline crossing a Bloomberg, the German government's seeing the economy contracting more than 5%.
brutal.
In 2020.
Brutal. That's a huge number.
The numbers are just absolutely
huge.
Ugly. In 47 minutes' time, we'll bring you a number out of the United States of America. Initial jobless claims just around the corner. From New York this morning, good morning to you all. This is Bloomberg Radio.
With the Bloomberg Business of Sports Report, I'm Michael Barr. DAZN, the sports streaming startup, is telling leagues it won't pay them for any games canceled because of coronavirus shutdowns. According to a person familiar with the matter, with payments due now, the company told partners that it will only pay for games played. The decision by DAZN, which has committed billions of dollars to sports, marks a controversial break from tradition. Sports leagues rely heavily on money from broadcasters and have been able to lean on their media partners in the past during stoppages in play. But DAZN is a startup, and every sport is on hold, forcing the company to take drastic steps. The NFL is gearing up for a normal season and playoffs, with 2 additional wildcard teams in the Super Bowl chase. NFL team owners voted to expand the playoffs by 1 team in each conference for a total of 14 next season as they continue to plan for the 2020 season to begin on time. And that is a Bloomberg Business of Sports Report. I'm Michael Barr.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the ad.
This week at Tesco, large Easter eggs are 3 for £8. And we've got a large choice too on all your favourite brands, including Terry's Chocolate Orange, Cadbury's and Maltesers. At 3 for £8, why shell out more? Tesco. Every little helps. Available in the majority of larger stores and online. Delivery charges may apply on 13th of April.
The sports world is full of inspirational stories of heroic figures. It also has its fair share of shady characters. Aaron Hernandez, Donald Sterling, Bikram Choudhury, O.J. Simpson. For detailed retellings of some of the darkest sagas in sports, search sports documentaries on the TuneIn app.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Next time on the New Yorker Radio Hour, I'll talk with our Washington correspondent about the many political battles being waged in the Capitol over how to deal with the new coronavirus.
You couldn't imagine a president personalizing a crisis with a virus, but somehow that's where we are.
Susan Glasser. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures on the rise along with European shares as investors brace for the latest unemployment data from the world's biggest economy. Oil surging after China unveiled plans to boost its reserves. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 41 points, Dow futures up 363, and NASDAQ futures up 102. The DAX in Germany is up 1/3%. 10-year Treasury little change, yield 0.58%. The yield on the 2-year 0.20%. NYMEX crude oil is up more than 10%, up $2.10 at $22.41 a barrel. COMEX gold up 0.9% or $14.20 at $16.0570 an ounce. The euro 1.0915 against the dollar. British pound 1.2439. And the yen is at 107.34. Walgreens Boots Alliance posted better than expected results for its second quarter, but the drugstore retailer said that the COVID-19 pandemic makes the future uncertain. For now, Walgreens said it would update its guidance in its next quarterly report. Its shares are up 3.4% in early trading. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you. The brutal economic story worldwide captured by the data. No doubt it will be captured once again by initial jobless claims in 40 minutes' time in America and in Germany in the forecast as the German government sees the economy contracting more than 5% in 2020. Tom, the silver lining, the good news is that fiscal authorities across Europe and right here in the United States are doing almost everything they can to throw everything at this.
Each in their own way. And right now, folks, we bring in a gentleman who's been very supportive of all our efforts. Jason Furman is a unique economist, and yes, there's an academic track, but far more at a young age, he had the courtesy to really tackle policy and almost applied policy within the American political economy. Professor Furman at Harvard and the former chairman of President Obama's Council of Economic Advisors. Jason, at this time and moment, and this is something we've gone back and forth with the economist John Farrell on. At this time and moment, Jason, do you wish that America and Washington was more fiscally like Europe?
I think the United States has a big advantage over Europe.
In what way?
It borrows at the level of the United States. And Europe right now is borrowing at the level of national economies, but then has a central bank at the level of the Eurozone. They need, the type of fiscal federalism in Europe that we have in the United States.
France is borrowing at pretty low rates, Jason. Just elaborate on that a little bit more. I'm a bit confused by that comment. They're borrowing at very low rates across Europe. Are you talking about burden sharing across the Eurozone?
Yeah, no. I mean, you see low rates in Europe because I think implicit in that is the expectation that at the end of this, the ECB will be there to backstop the national borrowing, and that there'll be some form of fiscal federalism. I think absent that expectation, Europe wouldn't be borrowing at the rates it's borrowing at now.
Let's talk about the response so far, Jason. You were very early in asking for pushing for a big fiscal package in the United States. It has come around, and I believe that you've had some part in influencing the decision to move quickly on all of that, and I congratulate you for the effort that you've done over the last couple of months on that front. Jason, there are many people that think we will need to do more, and I'm trying to understand the easiest way of doing more. Can you top up existing packages that are already available through the bill that was produced last week, or do you need a separate bill? What's the best way policymaking can go about doing that?
Certainly the most important thing in the United States is to extend and expand what's already happened. The unemployment insurance, ends at the end of June. There's going to be very high unemployment the rest of this year. There's going to be very high unemployment next year. The checks are one time. Incomes are going to be hit next year too. And we're going to need, a more traditional stimulus for recovery. So that's the easiest. Then identifying some of the deficiencies of what's happened so far. The biggest and most obvious one is states and localities. They're cutting their budgets right now. That's undoing some of the benefit of what's happening at the federal level. They can't borrow for themselves. They're not allowed to. So they need much more money. And then finally, we just need to keep open the channels for anything that could help healthcare and fund the health response. That's probably the most important.
Jason, everyone has their hands out right now, and everybody needs money, and everybody is looking for the government to step in and plug that hole. Some people, actually no one right now is particularly worried about the deficit, but some people have brought it up sort of in passing. We're looking right now at $1 trillion deficit. It's expected to rise to $3 trillion, especially as President Trump and even Democrats talk about sort of rolling back some of the tax provisions like the salt tax, et cetera, that sort of created a little bit of cost savings in the previous rounds. How big can the U.S. deficit sustainably get, in your view?
You saw years of 20% of GDP deficits in fighting World War II. This is like an invasion, and if that's needed, I wouldn't shrink from it. I mean, the point is the borrowing needs to happen somewhere. Households, states, localities, small businesses, large businesses, somebody needs to be borrowing, and the least bad position for that borrowing right now are national governments.
Jason, very quickly here, this is so important. The inflationistas got it wrong coming out of 2009. Are the inflation worriers going to get it wrong again?
In 2009, it was completely obvious that in a highly depressed economy, you weren't going to get inflation. Here on West Shore, you have a huge supply shock. You have a huge demand shock. We are maintaining a lot of incomes, not all incomes, but we're maintaining a lot. So I don't know. All I can say is if we get inflation, I think that would be good. That would be a good sign that we have adequate demand. It would help lower real interest rates, lower real wages. That would help the economy's recovery. So I don't know what's going to happen, but I don't think we should be afraid of getting inflation.
Jason Furman, thank you so much. The former chairman of President Obama's Council of Economic Advisors. John, I want you to get us to claims here in the next 30 minutes, but I just have to paint the picture of an absolutely perfect day in New York. Everything looks fine, except you look down at 96th Street, and all you can see each and every time is an ambulance crossing Central Park. John, I walked by Madison Avenue and 101st Street. That is the heart and soul of the great institution, Mount Sinai. Usually on 101st, you would see 2, 3, at most 4 ambulances. There must have been 15, maybe even 18 out front yesterday, crowding up 101st Street. Just
really
extraordinary sights.
Yeah. Brings it home in a big way, and our thoughts, as always, on Bloomberg Surveillance are with all of the healthcare professionals worldwide, how to keep us safe. And our thoughts and best wishes go out to their families as well for making a huge sacrifice at a really, really difficult time. So around about 35 minutes away, we will have an additional jobless claims number for you in America. That estimate is a little north of 3.7 million, a climb higher from an ugly previous week. From New York this morning, good morning to all. Alongside Tom Keene, I'm Jonathan Ferro. Together with Bloomberg's Lisa Abramowitz, you are listening to Bloomberg Surveillance live on Bloomberg Radio.
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown to a pro wrestler's perspective on life and culture at large, search sports and scroll down to the world of wrestling to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
The sports world is full of inspirational stories of heroic figures. It also has its fair share of shady characters. Aaron Hernandez, Donald Sterling, Bikram Choudhury, O.J. Simpson. For detailed retellings of some of the darkest sagas in sports, search sports documentaries on the TuneIn app.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Next time on the New Yorker Radio Hour, I'll talk with our Washington correspondent about the many political battles being waged in the Capitol over how to deal with the new coronavirus.
You couldn't imagine a president personalizing a crisis with a virus, but somehow that's where we are.
Susan Glasser. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically. Yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm
Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/C's change.
This is a Bloomberg Money Minute. Walgreens has posted better than expected results for its second quarter, but the drugstore chain said that the COVID-19 pandemic makes the future uncertain. For now, Walgreens said it would update its guidance in its next quarterly report. The results offer an early look at how businesses have been faring since the start of the global coronavirus pandemic. But the company's quarter ended at the end of February before the worst of the outbreak in the U.S. Southwest Airlines intends to apply for federal aid, becoming the second U.S. carrier after American, saying it will seek government assistance after being battered by a collapse in travel demand because of the coronavirus. The early market indicators are pointing to a higher Wall Street open this morning after Wall Street kicked off the new quarter on a lower note, and Sprint Wireless is no more now that the carrier has officially been taken over by T-Mobile. After 2 years of legal wranglings, the merger closed yesterday. The new company called T-Mobile will have around 100 million wireless subscribers. Gina Cervetti, Bloomberg Radio.
If you promise to cover the latest financial and business news from Asia,
we're talking about social enterprises in Asian countries
with expert analysts who really understand Asia.
Aren't you encouraged with respect to U.S.-China trade?
Then you must be us.
Tell us about the trend within this part of the world.
Bloomberg Daybreak Asia.
What sort of fiscal stimulus do you think we'll see?
Tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Once we get through coronavirus, it's very supportive and very stimulative.
Central banks themselves got caught hostage by markets.
Finance.
OPEC Plus is at war with itself.
We know we can create America's energy independence again.
Investment.
The market's anticipating the rate getting very close to zero in fairly short order.
Volatility is back, so that's going to make for more cautious trading.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone. John Farrell, Lisa Abramowitz, and Tom Keene. Thank you for being with us on again an historic Thursday. 1 week ago, a horrific weekly jobless claims, really identifying the size of this economic crisis. And John, we see that in 30 minutes. Again, claims will define millions of people furloughed, laid off, and indeed fired.
We know there's pain. We're looking for clarity on just how much pain there actually is right now. We look to the high-frequency data like initial jobless claims to do that. The median estimate, Tom Keene, 3.763 million. A huge range. The high, 6 million. The low, 800,000. So very little visibility still on a weekly number. But we know it's going to be big, and it's going to be big again in 30 minutes.
Yeah, and Lisa, I look at, as John mentioned earlier, 2 days in a row down 6% of the markets in a rebound today. But I would categorize it off of 4 a.m. this morning is a rather tepid rebound that we're seeing.
That's a fair characterization. Look, I think that last week, the week before, the conversation was around a little bit, does the economic outlook spur some sort of financial market stress or breakdown? The Fed came in with its fire hose, and now the focus really is on the economy, on the jobless claims. How bad can it potentially get? And the sort of financial panic seems to be at least put on hold for the moment.
And then the chart I put out earlier this morning, John, was the idea from J.P. Morgan, Bruce Kasman, and Joshua Lipton of 20% decline in non-farm payrolls, the level of those employed on non-farm payrolls, and that compares to a 12% decline in 1945 as we came came out of World War II and all that wartime employment. The size of this, it's not a double, but it's 60 and 70% shock that we're going to see as compared to what we saw in 1945 to 1947.
Not just the levels, Tom, but the speed at which we're getting to those levels. That's what's key about this shutdown.
Well said.
Looking for a negative print in the payrolls report this coming Friday, and it comes off the back of a month where we saw 273,000 positive, and you've got a huge reversal to a negative print expected this Friday. Let's get the view from SocGen, shall we? Really pleased to say that Subhadra Rajappa joins us now, the head of US rate strategy. Subhadra, very, very difficult to digest and process how ugly some of this data is going to be. What do you suggest is the best way to do that in the coming weeks?
Stay calm and observe. I think that, as you mentioned, there's potential that we could see, numbers that we've never seen before. And frankly speaking, even as I've been over 20 years in this business, and I find it hard to process the magnitude of the numbers that we're getting. I think it's important to sort of keep track of what's happening in the here and now in the high frequency data, but also keeping an eye on developments on the virus as well as the longer term outlook, because we are getting unprecedented amounts of fiscal stimulus, and the impact of both the monetary easing as well as the fiscal stimulus, as well as changes to the regulatory environment, we discussed this the last time I was on, are going to be key in providing the bounce back that the economy needs when conditions improve.
Yeah, it's sort of head spinning. I'm trying to keep track of all of the different levers being pulled on all sides of the government and trying to figure out what that means. On one hand, for example, you have this flight to cash just because of the fear. And then on the other hand, you have the expected increase in sales of T-bills. And I'm wondering, from your perspective, people piling into government short-dated debt, trying to just keep cash as they look at this uncertainty. At what point will the federal printing of money, will them basically just saying we're going to borrow as much money as we can in the T-bill market, at what point will that cause borrowing costs to rise for the United States in the short term, if ever?
So I don't think it's going to cause borrowing costs in the short term to go up anytime soon. I mean, just to put this in perspective, bills as a percentage of total debt outstanding during the financial crisis got as high as close to 35%. So right now we're nowhere near that. We're close to 15%. So given the amount of debt outstanding is so large, the Treasury really has a lot of room to issue bills I would say in the order of $600 or $700 billion in the coming months, and not really meaningfully impact the market. If you look at the AUMs or the assets under management in money market funds, that's close to $4 trillion. So if anything, there's a decent demand that you're going to see for money market funds because of the cash inflows, and they should be able to easily take down the supply that's coming from the Treasury.
You have had a fabulous house call. You've been shockingly right about depressed GDP, about just stillness to the economy. How do you respond to your institutional clients who say, all this is great, but we're going to have another bout of inflation after this, that with all this debt, this deficit, we're going to see higher rates? That just goes completely against the SocGen view, doesn't it?
It does. It really depends on what the depth of the slowdown is going to be. I would argue that right now, treasuries are not trading in line with fundamentals because we don't know what the fundamentals are. At some point, if there is a bounce back in fundamentals and GDP starts to pick up, and if this is in fact a temporary 2 or 3 quarter slowdown at best, then treasuries should start trading much more in line with fundamentals. And in that context, I would assume that treasury yields will have to rise because because the destruction we've seen right now is really not reflective of sort of longer term fundamentals.
Which raises a question as to how much the domestic buyer in the United States can absorb. There was a story about how initial Fed data shows an incredible exodus of foreign central banks and governments from U.S. treasuries, I believe to the tune of $100 billion in the month of March or in the first quarter, which was a record. And I'm wondering, is that going to pose a problem in terms of the demand backdrop for U.S. treasuries?
That's a very good question, Lisa, and I think that is the concern that the Fed is trying to address by introducing the Foreign and International Monetary Authority's repo facility, or the FEMA repo facility. So the idea there is that for central banks that already have custody holdings with the New York Fed, they're able to pledge some of their treasury holdings for dollars. So instead of selling their treasury holdings, they have a way of sourcing dollars by posting the treasuries they hold as collateral. So that should alleviate some of the near-term concerns about sort of a large-scale sales of treasuries coming from overseas accounts. Broadly speaking, I think there's still a large demand for dollars. You're not seeing that in the countries that have swap lines or dollar swap lines with the Federal Reserve. But for all the other countries that don't have access to dollars directly, I think this facility will go a long way in providing dollars.
Subhadra, before we let you go, I wanted to wrap things up by talking about interest rates. Pretty much every single major central bank in a developed economy that dropped rates towards zero in the financial crisis and the Eurozone debt crisis subsequently struggled to get them back north of 1%, with the exception of one, the Federal Reserve. Now the Fed is back down near zero again. Do you think they can repeat the same act that they pulled off previously?
I think it's going to be much harder, given the magnitude of the programs that are currently in place. I think what we saw during the financial crisis was large, but over time, and it took us really 10 years to unwind a lot of these programs completely. So I think this is going to be, the size of the program here is quite large, and the Fed, broadly speaking, I think is going to wait till the economy is on strong footing before they unwind some of these facilities, or even unwind some of the monetary and fiscal stimulus the stimulus that's being provided right now.
Subhadra, what should the little person do? The little guy, the little woman, they're sitting at home, they got a little pot of money, they're scared stiff of the stock market, and they have to buy something with yield. What should they do?
That's a tough question, because I think risky assets are still quite volatile. If you have a longer-term view on risky assets, perhaps that's the place you want to be. But over the short term, cash is not going to really give you any returns either. But it's just there as a safe haven asset. So I think it's going to be tough for sort of your retail investors to figure out where they should be putting their money in over the near term.
Subhadra, always great to get your thoughts on this program. Subhadra Japatha, Societe Generale's head of US rate strategy. Let's turn now and get you some news, some headlines worldwide. We can do that. Thank you, Michael.
Thank you very much, John. Thank you very much, Lisa. Thank you, Tom. Spain reported 950 more deaths from the coronavirus, the most in a single day, taking total fatalities in the country to more than 10,000. There are signs that the worst may soon be over in Italy as growth in new cases there moderates. Earlier, China said the U.S. was trying to shift the blame for its own outbreak after American intelligence officials concluded Beijing concealed infections. In the U.S., registered nurses are expected to hold small rallies across the country again today to call attention to the critical shortage of basic medical supplies. Bloomberg's Martin DeCarroll reports.
As the nation enters what are expected to be the worst weeks of the pandemic, nurses everywhere sound like Angela Davis, an ICU nurse in Kansas City.
We're having to share gowns. We are given one mask a day for the entire shift.
She says the scarcity of protective equipment is forcing nurses to speak out.
Number one thing we are most scared of is bringing this home to our families.
Federal officials revealed their stockpile of medical gear is nearly depleted after shipping out some 37 million surgical and respirator masks. In Washington, Martin DeCarroll, Bloomberg Radio.
The coronavirus has claimed another celebrity and caused heartbreak in New Orleans. Jazz pianist Ellis Marsalis Jr. has died after battling pneumonia brought on by COVID-19. Marsalis opted to stay in New Orleans for most of his career. His sons, Wynton and Bradford, became famous and brought him to the spotlight. Ellis Marsalis was 85. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Tom, Lisa.
Michael Barth, thank you. Thank you very much, sir. There's a lot of pain out there, and we're well aware of that. And when we talk about the economic statistics, I think one thing we're really trying to do at the moment is not just talk about a single number, but realise there's a lot of stories behind that single number, including the initial jobless claims number, Tom, that comes in 18 minutes' time.
Oh, the claims number will be extraordinary. And, of course, the service sector skew here is something. And that's not to take anything away from the different companies. You saw the Boeing announcement, John, overnight, where they'll do retirement buyouts and such. Each company has its own path. But I'm riveted by the inability of Washington to do what your United Kingdom did for truly small business, for the mom, the pops, the single guys. They're getting killed out there.
Well, having a plan is one thing. Deploying it and hitting your target is quite another. And many governments have got plans at the moment. What we need to do is start to see signs of success. And right now, it's difficult to get your hands around that. A little bit later this morning, we'll bring you that number. It comes in 17 minutes' time. Initial jobless claims expected to come in just north of 3.7 million. To Tom Keen's point, the pain has been skewed to the service sector, in particularly the restaurant, the leisure-style businesses that we've been talking about for quite a while on this program. We saw that in the ADP report yesterday. I wonder if that shows up in a payrolls report this coming Friday as well. Your price action ahead of all of that shaping up as follows in New York City. Your equity market after 2 days of losses with a little bit of a bounce, up by 1.8% on the S&P 500, positive 45 points. In the bond market, no big swings to speak of right now. Yields higher by a single basis point. Your 10-year 0.59%. From New York, this is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Listen to Raj go. Polyrhythm, paradiddle. A drum solo so epic, he nearly forgot his mom's birthday back in Delhi. Good thing Raj has Western Union on his phone and can send money quickly online. Download the app today. This service is provided by Western Union. FX gains apply.
At Dell, when we created the new XPS 13 laptop, we treated every little piece like it was everything. We crafted every part as if it were the most important thing we'd ever made. The result? Something you'll have to see to believe. Pity this is radio. See the new award-winning Dell XPS 13 at dell.co.uk. Every little thing is everything.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures are rising.
rising along with European shares as investors brace for the latest unemployment data from the world's biggest economy. Oil, meanwhile, is surging. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are up 41 points. Dow futures up 353 and NASDAQ futures up 110. The DAX in Germany's up 0.1%. CAC in Paris up 0.5%. FTSE 100 up 0.7%. 10-year Treasury down 1/32 yield 0.58%. The yield on the 2-year 0.21%. NYMEX crude oil up 10.5%, up $2.12 at $22.43 a barrel. COMEX gold up 1.7% or $27.30 at $16.1840 an ounce. The euro 1.0902 against the dollar. British pound 1.2425 and the yen 107.33. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. Big rebound in crude this morning, and that's playing into much higher prices in some of the big energy names, particularly in Europe this morning, Tom. BP is up by a little more than 8% in a single session. Royal Dutch Shell up by around about 11 percentage points after being absolutely bruised and battered through much of 2020.
Futures up, but they do not have the spirit that the tape was rocking at 4 a.m. I mean, I'm sorry, John. It's up. Futures up 40. Dow futures up 354, but it's not with the same oomph that we had 2 hours ago. Maybe a lot of nervousness 11 minutes away from that claims report.
11 minutes away from the claims report with futures higher by 41 points on the S&P 500, up by 1.7%. Pleased to say that joining us now is Gina Martin-Adams, our Chief Equity Strategist at Bloomberg Intelligence. Gina, great to get you with us on the program. Let's talk about that print in 11 minutes' time. We understand the complexity of the economic situation to a certain degree. We know there's some real pain. We're trying to get some clarity on just how much. How do you process that as an equity strategist, knowing that the number comes out at 8:30 is going to be particularly bad?
Yeah, we're in unprecedented times, clearly. The initial claims last week was really what sparked off this sort of recent risk-off kind of behavior in the S&P 500 again, as we sort of face the reality of just how awful the near-term economic conditions are going to be. And I think that, you work to try to answer the latter part of your question. How do you sort of absorb this data as an equity strategist? You work to try to understand the combination of what's priced in and what's yet to come. I do think that we priced in a lot of weakness with our massive downward move in the S&P 500 over the course of March. We think we priced in a pretty severe recession, but we also probably priced in the notion that that recession would end by the July quarter. So by the third quarter, we start to get back up and running in the U.S. economy. And I think that's what we're going to continue to question over the next several weeks is, will we actually get to peak contagion? Will we start to see signs that the U.S. economy will come back online in the third quarter? Because if we don't start to get that kind of notion, we could face a much weaker equity market than we were anticipating.
Gina, you have the advantage of tens and even hundreds of analysts working for Bloomberg Intelligence. I think all of our listeners, including me, have an understanding of small business crushed. I think of the Irish bar that John and I are in, all down below where he lives. I mean, these bars have been wiped out. I mean, the service sector wiped out. What do you see from big multinationals? What do you see from the bigger corporations? How are they furloughing, laying off, and firing?
Yeah, it's a tale of several different industries and several different companies. I don't think that there's any way to say, okay, all of the S&P 500 is proceeding in the same manner, because what you see is really tales of different worlds. You've got the healthcare and the technology companies and the consumer staples companies all still printing earnings growth, indeed having to increase wages to keep workers, essential workers in play, having to figure out ways to protect workers who are obviously still necessary. At the same time, you've got financials who are in many cases committing not to furloughing workers. And then you've got, the worst of the scenarios, which are the services industries, like some of the consumer retail companies, like the restaurants and the like, who are having to furlough workers. So I think that you've got really divergent experiences across the S&P 500. That's going to show up in the first quarter earnings season. I think one of the most stunning things that we've discovered over the course of the last few weeks is, while first quarter and second quarter earnings estimates are obviously plummeting, and as analysts start to absorb and reflect the reality of the economic situation we're in, there are still about a third of companies on the index that are going to produce better than 5% earnings growth. So there are spots in which the economy is still working and companies are still having to, maintain production and keep services up and running. It's just certainly not the overall story.
So they might actually be producing earnings in certain sectors, but in order to do that and to pay their workers more and just keep the lights on and cater to government wishes, they're scrapping dividends and share buybacks faster than at any time since 2009. And I'm wondering how much of a technical force this will be in sort of not propping up stock valuations going forward, as even the best performing companies try to basically shore up some of their liquidity.
Yeah, it's very true, and we've been reporting on this for the last couple of weeks as well. We've already had the most dividend cuts since 2009, and we probably will exceed the 2009 peak in terms of companies just completely trimming dividends. At the same time, share buybacks, we think, will take at least a percentage point from earnings growth in the first quarter, which is pretty substantial when you think about it, to have that much impact from just a share buyback in terms of its share count increase is pretty significant. So we are seeing this across the board, and it's going to be a drag on equities, especially because we've been in a cycle, specific to the share buyback question, we've been in a cycle since the Great Recession in which companies are really the primary source of demand. That share takeout has been a significant source of demand where investors really haven't been that interested in putting money to work in equities. Companies have taken shares out, which creates the supply-demand balance, resulting in stock prices rising. So that absence of share buyback is pretty critical for the supply-demand equation and is certainly going to work against stocks, in addition to the numerical impact on the earnings outlook.
And they were tapping the bond market to do that. They're tapping the bond market now for very different reasons. Gina, great to catch up with you, and thank you very much for the hard work that your team are putting in at the moment. Gina Martin-Adams there of Bloomberg Intelligence, our chief US equity strategist. Lisa, you were talking about cancelling dividends and buybacks. IAG, the owner of British Airways, cancelling that proposed final dividend. Not the only one. Many companies out there doing the same thing, Lisa, and we expect many more still to come.
Yeah, and it's interesting we haven't seen more dividend cuts in the oil sector. You were mentioning some of the energy names that were rebounding, but people expecting them to have to shore up some more capital in this time, especially with oil prices where they are, John.
Especially where this economy is too. Looking at the economy in around about 5 minutes' time, we'll bring you an initial jobless claims number in the United States of America. We'll bring you perspective from Barclays with Michael Gapin. Look out for that right here on Bloomberg Radio. Ahead of all of that, here's your equity market. Equity futures are up by 38 points, positive 1.55% on the S&P 500. In the bond market, treasuries pretty much unchanged. Yields high by just a single basis point at 0.59%. Your big move today is in the commodity market. It comes from crude. WTI by 11% to $22.57. From New York, this is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 6.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. Somehow, I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Witch Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom. Witch.co.uk. Our tests find you the best.
Been 17 months, 3 weeks, and nearly 6 days.
This is Gideon.
I don't want Jodie to be dead.
She's not dead. But I won't give up.
I don't know where Gideon is.
Nothing's going to stop me. I will find her.
This is not the end of it.
Someone knows something. Someone's hiding something.
What you know about Jodie?
But I'm getting closer.
Jodie!
And I can guarantee you one thing. The truth will out.
A Sky Original. Save Me Too. All episodes available now.
Not all heroes wear capes, but most wear tights. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis of the latest wrestling storylines, turn on the WWE podcast.
Big Steve edition.
Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
Because now on the show, everybody's kind of the same size, but as soon as I saw you, it's been...
For these and more, search sports and scroll down to the world of wrestling. Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City for our audience worldwide, we have some economic data for you. Here is Vinny Dow-Judice.
Well, this is a surprise. 6.6 million jobless claims last week, John. 6.6 million, roughly double what we saw the prior week. Of course, a record from World War II. You have new claims, no doubt. You have backlogs, no doubt. Jobless claims, 6.6 million. Rounded, 6.648 million if you want to carry it out and scribble it down in the back of the envelope. The prior week, we just got that number to 3.3 million, and it was revised a bit higher. Again, new claims and no doubt backlogs. I'm Vinny Dow-Judice, Bloomberg Radio. Let's go back to New York.
A record 6.65 million for initial jobless claims. Tom, absolutely tragic for the US economy, for the pain behind that number at the moment. The high estimate was about 6 million.
Yeah.
The low was 800,000, which gives you an idea of how much visibility people have at the moment. But that is a very, very sad number to read out aloud.
Yeah, my first reaction is that we frame 6 million over 2 weeks, and all of a sudden we're framing 10 million over 2 weeks. You wonder, Lisa and John, if that will change the fiscal debate in Washington.
Honestly, devastating number. Actually devastating. And I'm looking right now at history, and in 2009, at the peak of unemployment, the unemployment rate reached 10%. Goldman Sachs predicting 10.3% unemployment rate, which would be the highest since 1982. And it's coming at such a speed, just yanking out the security blanket from so many people who suddenly find themselves without a prospect of work for an endless period of time, John. That's the serious thing, is that there's no end date right now.
Well, the economy is totally shut down. This shutdown is totally unprecedented compared to what we saw in the financial crisis, which is why some of these numbers are so original, Tom.
I look at data, not much data move, but I would point out, and this is two claims, but also away from it, Euro-Yen shows stronger yen, and Swissy shows stronger Swiss against Euro. So there's a little bit of safe haven feel, even with a better equity market. But, John, do you see off your 3 Bloombergs that you have at your home, do you see much data movement here?
Not really. Saw futures just come a little bit lower off the back of it. We bounced back. We're now still positive, up by 38 points, by 1.54%. And that's the story of the moment, isn't it? We were expecting really bad data, and we got really bad data.
Let's do this. Let's bring in Michael Gapin of Barclays right now, who's more than accomplished here. on the rates of change. Michael, do these stunning numbers, as Lisa frames it beautifully, do these numbers make you pull forward the agony? Do you pull the May jobs report, showing April statistics? Do you pull that forward in your analysis?
We do. I mean, I think the weekly jobless claims data is probably the most important piece of data that we get now. It's only 1 week lag. It's fairly contemporaneous about what's happening in the economy. When you look at the number last week and this week and take those together, that's roughly let's call it a 6 percentage point rise in the April unemployment rate already, and we have a few more weeks to go for the April employment report. So it's not. I mean, I think it is likely that the unemployment rate will be rising above where we saw it in 08-09, and may come as soon as that April employment report, if not certainly into the May report. But and if you kind of, there's a historical relationship between activity and the unemployment rate, so you can kind of reverse engineer what might be happening to the economy from these jobless claims data, and it paints just an awful picture, and it's just reflective of the cliff effects on economic activity from all of these statewide shutdowns that we're seeing. So it's a sudden stop in the labor market and a sudden stop for many parts of the U.S. economy.
Michael, I'm really struck by how devastating these numbers are, because as John and Tom keep talking about all of the human stories behind it, is there any tiny little bit of silver lining in that the people who file for unemployment benefits are actually getting unemployment benefits and at least will be able to pay the rent and buy groceries, given the fact that the U.S. has expanded those benefits?
Yes, I mean, I think that's probably, secondary consideration for the workers, but certainly it's a reflection of, it certainly illustrates why we need to get fiscal resources to households and business immediately and make it targeted for where it's needed. So yes, the fiscal plan, which upped unemployment benefits, is certainly the right move. And the idea is we need to get resources to these households. The hope is that this is a temporary surge in unemployment, and if we're successful at getting the coronavirus under control as we move into June and July, maybe a lot of this unemployment can come back. I just worry that my main concern here is for small business, and I'm talking about firms with say 49 employees or less. There's 33 million people employed in these businesses, about 27 million of them would be services related. So my worry is we don't get enough resources to those types of business.
John Farrow, some context here, which I think is so important. We've lost a Florida of employment. Florida's statistic is 10 million employed. So in 2 weeks of claims is a generalization. We've lost to Florida as a nation.
The numbers are absolutely stunning. And Michael, where we really need your help is how to navigate some of the data we'll get in the coming days. Tomorrow we'll get payrolls. In around about 24 hours' time, we'll be having a conversation with an economist like yourself, trying to work out how to read a labour market report that for many people is incredibly dated. What do we do with tomorrow's non-farm payrolls report?
Honestly, I think we ignore it, because the claims data are telling you what April's going to look like, and so we're likely to see some deterioration or a modest deterioration in the labor market from the March employment report. But these two initial jobless claims reports from last week to this week are telling us April is going to be monumentally worse. So honestly, I think March is already old news, and these are the two most important pieces of information we've had.
Michael, I gotta say the emotion in this number is dramatic. Is there a sense that these people will be able to get their jobs back once the economy starts to get up and running? In other words, how sticky is this really high unemployment rate going to be?
I think the way that we're thinking about it is that some of this will likely come back, but I think we're maybe half of it comes back, and I'm worried that there's a longer tail. So say by the end of the year, we're still likely to have an elevated unemployment rate. We can reopen the economy back up, but it may be that we're slow to unsocial distance, if you will. And I also think there'll be lagged effects from other sectors. Like certainly there'll be spillover to the energy sector for a long time because of where oil is trading. And I think there will be negative wealth effects on consumption. And this is largely services activity that we're taking away, and it's not so easy to make that up. So certainly my hope is a lot of this unemployment will come back relatively quickly as we move into the third quarter. I have concerns that there'll be a large portion of it that will linger for quite some time into next year.
Equity futures on the screen right now down by 18 points on the S&P 500. We are rather up by 16 points on the S&P 500, up by 0.6%, but erasing some of the big gains we had a little bit earlier on in the session. There will be people asking right now, Michael, whether the fiscal aid package in Washington is big enough, even at $2 trillion. Is it big enough?
We don't think so. We think that there will be a phase 4. Certainly the House wants to direct more resources to state and local governments, and there's conversations around whether we could do more on infrastructure. So we certainly think phase 3 was a good down payment, and the needle in terms of a willingness to support the economy flipped very quickly in about 7 days in Washington. So it's a large package at 10% or so of GDP, but I do think more will ultimately be needed, and I do think this type of number, I think, helps to solidify that.
Michael, you've got a great international resume as well. Our David Weston's going to speak with Vice President Pence here in 3 hours. Okay, great. Florida just fell off the map in terms of labor economy, and as John's Nation has figured out, you have to put the check in, as you brilliantly said, the small business hands, the service sector that's getting crushed. Why can't we do that? Why can't politicians just say this is a natural disaster one-off, effective immediately, we're cutting blah, 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 blah? Why are we unable to do that?
I don't know. I do wish that it were geared a little more like the support provided in Europe and the UK, where the arrangement is you keep people on payrolls and we'll foot 75 or 80% of the wage bill for, call it for 3 months, and then we'll revisit if we need to do another 3 months and go from there. So I do wish it were directed a little more in that way. I don't know why we don't do it. It's just not what we do. And I think it's potentially a problem because I worry, as I said before, about gaps, that we don't get the resources down the spectrum from large firms down to small firms. And I worry about potential cracks and gaps, and we don't get resources to where they're needed most. But yes, if I had a magic wand, I would have designed the fiscal stimulus a little more into that direction, as direct income support through business to households, keep people on payrolls, keep them getting benefits, and just have the government support that bill.
Michael Capon of Barclays, really appreciate your time this morning. A difficult time for everyone worldwide at the moment, particularly the people behind that number. Equity futures right now just positive at 1/3% of the S&P 500, up just 8 points. Yeah. We erased the gains of the morning off the back of a record 6.65 million initial jobless claims. That's the data, the price action. Let's get some news, some headlines worldwide. Here is Bloomberg's Michael Barr. Good morning to you, Michael.
Good morning, John. Tom, Lisa. Spain reported its record 950th deaths in 24 hours from the coronavirus, even as its infection rate appeared to ease. In the U.S., President Trump says he is looking at hazard pay for healthcare workers as they deal with the coronavirus pandemic. The president, during yesterday's White House briefing, called doctors, nurses, and other healthcare workers warriors and soldiers. Los Angeles officials are urging all residents to wear face masks. Mayor Eric Garcetti says residents who are non-first responders should wear non-medical masks or even a tucked-in bandana to help slow the spread. Garcetti said L.A. now has the capacity to make 2 million masks per week thanks to local businesses.
With 99 essential businesses that have already reached out in need of that protective gear, LA Protects will match that with those companies and workers that need them to help us all slow the spread.
The coronavirus outbreak has sent 45 states into lockdown and businesses were forced to close up. Millions of workers have been laid off. We just gave you the weekly jobless numbers and claims just a few moments ago. And now there's a name for at least one of the persons involved in that. Some of the hardest hit staff in the restaurant industry, like Julia from Long Island, New York. She tried to file for unemployment last week, but could not get through.
I have decided to start weighing in the possibility of maybe applying to local food store. I would prefer to stay at home, just as we are advised, but some of us don't have the luxury of waiting around for a check to come in, and I'm definitely one of those people.
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts, more than 120 countries. I'm Michael Barr. This is Bloomberg. John.
Michael Barr, thank you very much, sir. Equity futures are raising most of this morning's gains in one big swoop in the last 15 minutes. We are positive just 11 points now, up 0.4%. Going into that number, up by around about 1.5% on S&P 500 futures, Tom. A really, really big downside surprise on initial jobless claims.
I can't convey how odd the data screen is on the Bloomberg, John. The lethargy in FX with dollar stronger, obviously off of that. There's some exceptional nuances in how markets are adjusting to that historic statistic.
From New York City this morning, good morning to you all. We'll do our best to help you get some clarity, some visibility on a really, really tough labour market. This is Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Coronavirus concerns may be making the suburbs look a little more attractive for some home buyers and renters.
In the long run, there could be a slight shift towards desiring single-family homes because the high-density living in apartments and condominiums, especially in light of the virus events, may lead to some psychological barriers.
But Lawrence Yoon, chief economist at the National Association of Realtors, also says don't count out city living just yet.
It is way too early to say whether single-family or multifamily, any differences.
Overall, the Mortgage Bankers Association says mortgage applications to buy a new home fell 24% last week from a year ago, and they plunged more than 30% in hard-hit New York, California, and Washington State. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor, is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials. So taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. The sports world is full of inspirational stories of heroic figures. It also has its fair share of shady characters. Aaron Hernandez, Donald Sterling, Bikram Choudhury, O.J. Simpson. For detailed retellings of some of the darkest sagas in sports, search sports documentaries on the TuneIn app.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and the number of Americans applying for unemployment benefits more than doubled to a second straight record as the coronavirus widened its reach and closed more businesses. A total of 6.65 million people filed jobless claims in the week ending March 28th, as many stores and restaurants are forced to close across the nation to mitigate the outbreak. Futures remained higher, with S&P futures up 13 points, Dow futures up 103, NASDAQ futures up 22. The DAX in Germany is down 0.8%. 10-year Treasury down 2/30 seconds, yield 0.58%. The yield on the 2-year, 0.21%. NYMEX crude oil is up 10% or $2.06 at $22.37 a barrel. COMEX gold is up 1.9% or $29.80 at $16.2120 an ounce. The euro is at 1.09 against the dollar. British pound 1.2419 and the yen at 107.12. And that's a Bloomberg Business Flash. Tom and Lisa.
Karen, thanks so much. The Vice President of the United States will speak to our David Weston today at 12 noon. Yesterday, we spoke to the likes of Abby Joseph Cohen, Olivia Blanchard. We spoke earlier this morning to Jeffrey Sachs and Jason Furman. None of this matters because all they want to do is hear from Jonathan Miller Samuel. Right now in real estate in this New York, real estate in all the major cities of this nation. Jonathan, I can't imagine what you have gleaned in your data, in your study, in your embedded knowledge of our real estate. How does this rent conundrum play out? Millions can't pay. Landlords aren't going to get the rent. They have financing due. How does it play out?
Well, I think what is a reversal from the financial crisis, I think the banks are going to be the one that are going to do the heavy lifting on supporting landlords as they see a huge drop in income over the next couple of months. I don't think there's any way around it.
Excuse me, Lisa. I'm sorry. Lisa, go ahead.
Well, Jonathan, heading into this, property valuations were already declining in New York City. And Jonathan, I'm wondering how much you see property valuations declining further from here, given what we're seeing in terms of just a complete shutdown of the city that never sleeps.
Right. It's interesting because the real estate brokerage business, specifically in New York City, was considered a non-essential business until yesterday, and Cuomo reversed it. And so now we could have real estate agents, some running around selling property, which is counterproductive on the concept of shelter in place. If you look at the last two big events in this market, one was 9/11 and one was the Lehman moment, which didn't, removing the tragedy component aside and just looking at housing, we're looking at, we could be looking at a short-term price drop anywhere from 25 to 30% because you simply don't have what we saw before and then a quick rebound.
That's right where I wanted to go in terms of what a bear market is in real estate, because the elasticities are totally different, the mortgage and the leverage. And that is the history of this, John Miller, that we see a 15% decline in real estate in the major cities and across this nation?
So I think there's a high probability of significant price drops in the short term. The variable here is how long, in each region does this virus play out? Therefore, how much damage does it do to the economy? Therefore, how much damage does it do to the housing market? And I think it's pretty clear. There was a lot of optimism coming into the year in harder hit areas like New York that things were that we were bottoming and we were looking better. But really, all that's out the door. You can't look backwards. Behind this event, it's not relevant. What we're seeing now is we're seeing inventory fall sharply, which sounds good, but really what it is that consumers are not putting their properties on the market. I think landlords in rentals are going to do everything they can to accelerate the renewals because it's difficult for people to run around and look at property. I think they're going to try to retain the tenants that they have, and I think there's going to be some price compression.
Jonathan, taking a step back, I want to talk about the behavior of Americans and whether we are going to see a shift out of some of the bigger cities where you see more concentrated populations to, the suburbs and beyond in response to the threat of a pandemic. We've seen that on the peripheries. Is that going to accelerate?
I don't think so. I do think that in the short term we'll have, and we already saw in the over the last month that people trying to do short-term rentals in the suburban markets, but they physically couldn't move their stuff out of the city because many buildings don't allow movers to come in and out. Yeah. But I don't see a massive restructuring, but I do see a short-term advantage to the suburbs. I think we do have short memories as we've seen in the past.
What do you see in Florida right now, John Miller? What do you see down there? The dynamics are different down there than some of these other cities.
Yeah, we aren't. They're having the outbreak. The state just had the lockdown. I think New York is probably two or 3 weeks ahead of Florida in terms of stalling or pausing, simply because of the pragmatic element of people not being able to view property. I think the idea of someone buying virtually right now is still a concept that is going to accelerate in popularity, but is really on the margin. I don't think it's going to replace people physically looking at property.
Jonathan Miller, thank you so much with Miller Samuel this morning. You can hear in the background of one of our signals, that may be me for all I know.
That's me.
The sirens of New York City. It is something, folks. It is just chilling. As someone, I can't cite it, I'm sorry, but someone out on Twitter, Lisa, said brilliantly, it's not only the sirens, but it's the silence of the city amid the sirens.
Yeah, that's what strikes me.
Is a great distinction.
That's what strikes me, is just walking down the street and seeing all of the closed restaurants and coffee shops and laundromats and everything else, and just the shuttered windows. And against that backdrop, I think that's the key. The sirens are all the more loud and all the more prominent. It's a tough time right now across the country for a lot of people in a lot of different ways.
I say good morning to all of you nationwide, particularly Bloomberg 960, the Bay Area, waking up early. San Francisco, a jobless number 25 minutes ago. Weekly claims, it was bad, and then it was further bad. Our Luke Kawa noting that it was worse than any of the estimates of economists. Take 1 week and 2 week, add them together, and I'll let somebody tell me what the exact number is, but it rounds out to 10 million people in this nation. Truly historic, truly not within the realm of thought of anyone I know within our political economics. Markets were rebounding. They've pulled back a little bit. There's a churn to it with some dollar strength as well in the last 20 minutes. I don't want to oversell that, but nevertheless, there we are. We prepare for the jobs report tomorrow. It will not have the drama of today's statistic, but nevertheless will be important. This is Bloomberg.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
The sports world is full of inspirational stories of heroic figures. It also has its fair share of shady characters. For detailed retellings of the darkest sagas in sports, explore TuneIn's documentary podcasts, like 30 for 30's The Sterling Affairs, about the scandalous life and times of the former Clippers owner, Donald Sterling, and Gladiator, which follows Aaron Hernandez's transformation from Super Bowl star to convicted murderer. For these and more, search sports documentaries on the TuneIn app.
On this week's On the Media, we are awash in messages, but some messengers are more effective than others.
Ventilators, ventilators, ventilators. We need 30,000.
Meanwhile, some media outlets choose not to air the president's press briefings live, and media critics ponder what's the right balance between good information and all information. All that and more on this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
You can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seizechange.
This is a Bloomberg Money Minute. The number of Americans applying for unemployment benefits more than doubled to a second straight record last week as the coronavirus widened its reach and closed more businesses. The total number of jobless claims last week was more than 6.6 million, as many stores and restaurants were forced to close across the nation. The prior week's level was also revised up slightly to just over 3.3 million claims. The figure topped all analyst estimates. Boeing plans to offer voluntary buyouts to its entire staff of 161,000 workers in a bid to cut costs. The company will provide more information on the terms of the buyouts within 4 weeks. Stock futures still point to a higher open, but they've pared some of their earlier gains since those jobless numbers came out this morning. Wall Street kicked off the new quarter on a negative note. Across the board, the market was down more than 4%. Gina Cervetti, Bloomberg Radio.
The markets. No, you can't just run screaming from the room.
A lot of economists are just throwing up their hands and saying, we don't know.
But you don't have to manage this alone.
What are you looking at to give you some sort of compass through this period?
Lisa Abramowitz and Paul Sweeney.
What is your early read as to the scope and scale of this plan?
Bloomberg Markets. Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value in high-vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Bloomberg Surveillance from New York City. We welcome you this morning. We need to put in perspective this historic claims data. Our Reed Pickert does that, Paul Sweeney, this morning. It's real simple. Pennsylvania, the most people file for unemployment benefits By Reed Pickett's calculation, roughly 12% of the state's workforce has submitted a jobless claim in the last 14 days. Absolutely. I have never perceived that, Paul.
No, and I could never have conceived of that, Tom. Some extraordinary numbers, just higher than any estimate out there on Wall Street. So this is obviously everyone is just kind of rewriting kind of the rule book as we go along here, Tom. Numbers that we've just never seen and never perceived, and it goes back to that fiscal stimulus and the need for continued fiscal stimulus. So this will be a wake up. Not that the Congress in Washington needed a wake up call, but it'll be an additional data point for the kind of Congress to think about.
In their defense, this is worse than any estimate we saw. Thank you, Lukawa, for that perspective. And I'll tell you, Paul, it adjusts the debate. And, of course, this goes to David Weston's important interview with the vice president here in 3 hours. But this really underscores, and frankly, the president, to give the president credit, I think he's been very good about the number of people that have been hammered by this. But, Paul, I don't see the transmission mechanism of well-intended fiscal efforts to 12% of Pennsylvania's workforce.
No, it's going to be a key issue, Tom, and it goes to one of the key issues that we heard about in that first round of stimulus, which is getting cash into the pockets of American consumers, and that's going to come even more to the forefront, I think, after looking at these numbers.
One other statistic, folks, just to give perspective here. In the past 2 weeks, 6.5%, make it 6%, 6% of employed Americans have filed for claims. That is extraordinary. So that's the backdrop. Down 6% for equities in the last 2 days. A nice lift here. About 5 a.m. futures started giving away. They held, but gave away. And then they've given away a fair amount here right now. Still green on the screen. David Wilson with individual company perspective. David, an historic day.
Indeed it is, Tom. And I'll tell you, if you look at what's going on in the stock market, what really jumps out are the gains among energy shares. They're rising along with oil prices. You got people with knowledge of the matter saying China's buying crude for a national reserve, and President Trump saying he expects Russia and Saudi Arabia to resolve differences that have led to plunging crude prices. You put that all together, you see ExxonMobil up 4.5% in early trading, Chevron up 6%, Occidental Petroleum up 7.5%, and in oil services, Halliburton up 6%. Southwest Airlines higher by 2%. The carrier disclosed it plans to apply for U.S. government aid. CEO Gary Kelly told employees this week that the airline's losing money on every flight. Now, Southwest is following the lead of American Airlines, which wants as much as $12 billion in assistance. Americans up 2% in early trading. Delta and United also higher by 2%. Most active stock, Carnival, it's down 8.5% right now. The cruise line owners sold $500 million of shares at $8 apiece. That's a discount of 9.1% to yesterday's close. Carnival right now trading at $8.05. Now, the sale was 60% smaller than Carnival originally planned and was cut twice. You look at other cruise line owners, they're down as well. Royal Caribbean lower by 2%, Norwegian down by 1.5%. We have some earnings to talk about. Walgreens Boots Alliance up 1.5%. The drugstore owner's profit and revenue for the fiscal second quarter beat analyst average estimates in a Bloomberg survey. Now, Walgreens declined to update this year's forecast in light of the coronavirus. You have CarMax also up 1.5%. The used car dealers' fiscal fourth quarter earnings and sales beat estimates. Now, the number of cars sold in locations open more than a year climbed 11%, well above the average projection in a consensus metrics survey. Now, whether that carries over to the current quarter is a whole other story entirely. PVH up 4.5%. The maker of Calvin Klein Apparel posted fiscal fourth quarter earnings and sales at topped estimates. Now, PVH withdrew this year's forecast, suspended dividends and stock buybacks, and drew down $750 million from a line of credit. And if that wasn't enough, CEO Manny Chirico told CNBC he tested positive for the coronavirus. Doesn't have any symptoms at the moment. Nonetheless, he has that issue. Macy's is up 1.5%. Customer PVH, among other things. Now, the department store chain's higher, even though it's being dropped from the S&P 500. Macy's will be replaced before Monday's opening bell by the heating and air conditioning company Carrier Global, which is being spun off by United Technologies. And one stock that's down in early trading, Zoom Video Communications, lower by 6%. Elon Musk's rocket ship company SpaceX banned employees from using the video conference service because of security issues, according to Reuters. And the Zoom CEO, Eric Yuan, said in a blog post late yesterday that the company will hold off on new features for the next 90 days to focus on privacy and security.
Bloomberg Stocks editor Dave Wilson, thank you so much. Futures here kind of giving back some of those gains from earlier in the morning. Tom, as you were suggesting here, we got the S&P up 7. Let's get a sense of where the action is in pre-market trading. Michael Regan, Bloomberg Markets Live, senior editor. Michael, what are you really looking at here? We had that historic jobless claims number. Futures kind of giving back their gains. We just heard from Dave Wilson where the action is in some of the names. What are you seeing?
Yeah, Paul, I mean, like you said, it's just such an eye-popping number to see those claims numbers. What we're looking at, almost 10 million over 2 weeks. The Boeing headline really jumped out at me, too. The fact that Boeing is literally offering a buyout to basically its entire workforce. I mean, these are things, we've lived through 9/11, we've lived through the financial crisis, the various wars and political dust-ups, but this is unlike anything of our lifetime. And to me, the big question is, a lot of optimists out there had sort of been hoping for a sort of V-shaped recovery in the market. We saw that low in the S&P, at least a temporary low, about a week ago. I don't know how anyone can have that much confidence in that low being, the low for this cycle, just given the unprecedented damage we're seeing to the economy. Yishi on the Markets Live blog had a very interesting stat that has kind of stuck with me, and it's that the trough of the market, in other words, the low point of the stock market, usually occurs on average about 195 days after the onset of a recession. So to kind of hang your hat on the notion that we set that low March 23rd, I believe it was, when the recession just really probably just gotten started. I mean, we'll obviously have to wait for the MBER to confirm that and sort of put a date on it. But, to think that we would have set that low so early on in this episode, I think is hard to believe at the moment.
So, Michael, as you think about it here and the markets here, what do you think the markets are really going to be hanging their hat on over, the next several weeks and months? We're sure to get, more and more data points like this, whether it's GDP, consumer confidence, employment numbers. What do you think the market's going to be really focusing on?
Well, in the equity markets, obviously the earnings season will get started in a couple weeks, and it's bound to at least sort of maybe unlock this highly correlated risk-on, risk-off trade that we've seen where everyone's either dumping everything or buying everything. But that said, it's just, Bloomberg had an interesting story on this earlier today, Sarah Ponzak, just talking about how Wall Street's basically flying blind. The joke was always to joke about how companies manage to beat analysts' earnings estimates by a penny and, how suspicious that was. Well, I think a lot of people are going to wish we could go back to that regime because the surprises are bound to be astounding. Perhaps even on the upside for some companies, but certainly on the downside. One stat she had in there was that, this is from Jonathan Golub, the strategist at Credit Suisse. Last week, 17% of earnings estimates were revised. And, in a normal world, that would be an insanely high number of earnings estimates to have revised in a week. But it really seems kind of low given what we're seeing happen in the real economy. So a lot of analysts simply have no idea what to put as their forecast. So these consensus estimates are going to be very stale by the time companies report.
Mike Regan, do you know the cash level of institutions right now? I mean, have you had any kind of frequent data in, certainly since March 15th, which shows the positioning of institutions?
Not at my fingertips, Tom. It's a good question. You always stump me with the good questions.
I only do it to you. I do it to no other guest, Mike, just you.
look that up and get back to you. But I mean, certainly, anecdotally, you can see that people have been trying to raise cash left and right. It's kind of, you can see the evidence of that in just the wacky moves in Treasury yields in recent weeks when, the bottom was falling out of the stock market, but people were selling Treasuries as well. I mean, but to counteract that is just the massive outflows that institutions are seeing too. So it's, they're trying to raise cash both to sort of protect themselves, but also to match those outflows they're seeing. So it's a tricky data point to get your head around.
Mike Regan, thank you so much. Bloomberg Markets this morning. Truly extraordinary, folks. Just before we get to the news here, I really can't say enough about the shock of the jobless claims number. Really almost 2 weeks of data coming in 1 week, compressed to a 6+ million. Huge statistic. With our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. Spain reported 950 more deaths from the coronavirus, the most in a single day, taking total fatalities in the country to more than 10,000. China locked down a county again after a flare-up in cases and rejected U.S. claims that Beijing concealed infections. In the U.S., COVID-19 cases in the South continue to grow. Louisiana's Governor John Bel Edwards says the state is now dealing with more than 6,400 cases and more than 270 deaths.
There is no reason to think that Louisiana won't look like Italy.
Globally, coronavirus cases topped 942,000. More than 2,000 ventilators in the national stockpile are unavailable right now because they haven't been maintained. A lapse discovered as hospitals beg for more of the devices. Bloomberg's Martin DeCarroll reports.
In New York, doctors fear the shortage of working ventilators could force them to make wrenching choices about which patients receive the life-saving care. Dr. Mitchell Katz oversees the city's public hospitals.
I think it's much better to focus on getting enough ventilators so that we don't have to make an allocation decision.
In Louisiana, Governor John Bel Edwards says they're looking for any ventilators which might suit the circumstances.
Ventilators that might be used for anesthesia purposes in a surgical center.
And in California, officials say 170 of its ventilators arrived from the national stockpile broken. Martin DeCaro, Bloomberg Radio.
In tennis, Wimbledon has been canceled for the first time since World War II because of the coronavirus pandemic. News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Tom.
Michael, thanks so much. I really want to point out Heather Perlberg and Claire Boston with a critically important article for Bloomberg today on the mortgage market of how those unpaid rents go right through to landlords and into the securitized, the derivatives market of the real estate industry. I'll get that out on Twitter. That's must reading. You need to know that the markets have reversed from up 30 on SPX, S&P futures at negative 11 right now, Dow futures at negative 167. That's a big swing off a difficult jobless claims statistic. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
Influential.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and the number of Americans applying for unemployment benefits more than doubled to a second straight record as the coronavirus widened its reach and closed more businesses. A total of 6.65 million people filed jobless claims in the week that ended March 28th. Futures turned lower this morning, with S&P futures down about 13 points now. Dow futures down 157 and NASDAQ futures down 34. The DAX in Germany is down 1.7%. 10-year Treasury up 1/32, yield 0.57%. Yield on the 2-year 0.21%. NYMEX crude oil is up 8.1%, up $1.63 to $21.94 a barrel. And COMEX gold is up 2% or $32.20 at $16.2380 an ounce. The euro at 1.0860 against the dollar. British pound 1.2372 and the yen at 107.18. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thank you so much. We welcome all of you across this nation, Sirius XM Channel 119. A particular welcome to all of you listening on various digital products out of your homes, sequestered away. It is a brutal virus, a brutal pandemic. We hope that we're giving you the best in conversation. Paul Sweeney and I know for certain we've given far too much exposure over the last 3 weeks to Damian Sassower of Bloomberg Intelligence. He's ensconced trying to figure out emerging markets, and he's been incredibly wise. Damian, I got a lengthy note yesterday by a fancy person in the EM space, and they walked through their shock at how naive we are about the IMF's options. The idea of what the IMF can do, as we saw the Fed act this week. What can these institutions do as we look at the data, we look at the currency markets, and we know what's coming?
So I think the IMF is really going to have their biggest impact with the distressed emerging market situations. I'm talking Argentina, which is looking to press on with the $69 billion distressed exchange. Good luck there. Zambia, which is now seeking to restructure $12 billion in debt. Ecuador, which is now technically in default. And Lebanon, which is looking for a $15 billion IMF loan. So the IMF plays a key role on the periphery, but you're absolutely right. I mean, the EM downgrades across the majors are coming, and they're coming in force. Colombia yesterday, we've seen Mexico, South Africa, and the spillover, Tom, to the large quasi-sovereign dollar borrowers. I'm talking Pemex. We must remember, Pemex has $40 billion in dollar debt. That's bigger than Russia and Brazil, Tom. And
that's fat. Paul, that's the only reason we put up with Sassower.
I know. I know he has a day job, but
let's translate that. The Mexican oil company has more dollar debt than Brazil and Russia combined?
It's just about equal, actually, yeah, to $40 billion. And if you just and if you look at Codelco, which is the large copper producer out of Chile, which was recently downgraded by Fitch, $12 billion in debt. So these are not insignificant issuers of dollar-denominated debt. And with yesterday's move to downgrade Colombia, now you're going to probably see Ecopetrol, their big quasi-sovereign oil producer, get hit. So it's just relentless across the majors for sure.
So, Damien, is the IMF kind of the lender of last resort for these companies in these countries?
I think that used to be the case. I think now it's the dollar with a lot of the repo lines that have recently been put into place, Paul.
Right.
But I think, look, the IMF is going to play a big role here insofar as just its resources, its ability to kind of know what's going on the ground locally in these markets and where the money is needed most. That's a key role that no one else can really play. So the IMF is absolutely critical to getting the stimulus to where it's needed most, in my opinion.
Go all Carl Weinberg on us, the great economist of high-frequency economics and all of his experience in the crises of the 90s. Damien Sassower, when this comes to that point, what happens? Is it a cram down where the debt's retired by force? Do they extend it out 200 years? Do they squeeze the interest rate down? I mean, what's the process that's coming?
Well, for the answer to that, you've got to really look at the other areas of the global financial markets to see where's your marginal risk taker going to emerge from? Who's going to buy this stuff, and at what prices are they going to buy this stuff? I mean, we could talk about extending out 100, 200 years, but if no one's going to pay that price, if there's no clearing price for that debt, Tom, then we're kind of, it's pie in the sky. So for me, if you just look at some of ththese funding market dislocations across the whole, I mean, we had T-bills that were negative last week. They're no longer negative. We had forward points, in the China yuan, negative out to 5 months. What that means is that you got paid to hedge your dollar exposure. That's no longer the case. It's been completely reversed out. I've been beating to death the concept of the cross-currency basis. We've now gotten to levels where they are so tight that you're probably going to see large institutions starting to prepare for the half-year turn at the end of June because, they're just so attractive at these levels, and they're not going to be there for very long, right? So these are the sort of dislocations I'm watching. You mentioned previously what's going on in commercial mortgage-backed securities here in the U.S. That is the next focal point for all U.S. dollar spread assets. Commercial loans reset on the 9th of this month. The current situation means to me that equity investors are going to walk away from their rent obligation. Mezz lenders are going to get left holding the bag, and we'll see how many of them actually want to take control of some of these properties. I mean, I don't think you're going to have. I don't know. It's not my game, but that's the focal point for me for sure.
So, Damien, a lot of the companies, a lot of the countries you've been discussing this morning are really tied to oil here. We're sitting down here at $22 for WTI. Where does oil need to be to ease some of the pressure on these companies in these countries?
Oh man, that is a good question because there are winners and losers. It isn't really a one-way street. Even though obviously contango, which is the inverted oil curve, is bad for spreads. But here's what I'm looking at. Right, you had this big article coming out this morning talking about China taking down all this oil. Well, good luck with that one. I mean, the trigger pricing for teapots, that concept of pay as you go, it won't work in this environment because they need to get bank lines in place in order to convince Trafigura and BP and these big oil traders to allow them to avoid purchases. That's just not going to happen. So, it's at Platts, I think, storage globally, 1.4 billion barrels of storage, 50% being used. It's going to jump to 90% in April. Good luck trying to store all this oil that they're looking to buy. So, I think we're at that point here, that breaking point of oil where I just don't know if lower is necessarily going to just what the pain means.
Damien, thank you so much. A daily visit with Mr. Sassower. He's been of huge value to Team Surveillance here through this crisis. I really can't convey enough, folks, how things shift. As we know, April 1st, rents came due, and nationwide, it was really ugly. All the anecdote that we see here from our family and from people at Bloomberg is it was really ugly. And as Mr. Sassower mentions, it rolls right over onto the landlords, onto the mortgages, and onto the various securitized markets of our real estate industry. That'll be a theme forward.
Yep.
Paul, we're up a zillion green on the screen. Things are great points, and that's all evaporated, hasn't it?
Yeah, it really has, Tom. Kind of rolled over that, the jobless claims number just beyond anyone's expectation, and I think the market's trying to really digest what that means going forward. And it's again just setting new parameters, I think, here for how low this could go.
Curves, yields a little higher. We've got some curves actually flattered by a bit. Futures -8 now. Dow futures at -108. The VIX 57.01. Please stay with us. We need to get the markets open. Again, the Vice President of the United States at 12 noon with David Weston. This is Bloomberg Radio.
Message and data rate may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
London. Find Unlimited is here to brighten your day. Vodafone and Samsung are giving you the chance to win one of thousands of tech prizes all over the city, including the new Samsung Galaxy S20 Ultra 5G. Play from wherever you are. When we say the word, look for the Vodafone Unlimited symbol near you for your chance to win. Register now at findunlimited.co.uk.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
At Dell, when we created the new XPS 13 laptop, we treated every little piece like it was everything. We crafted every part as if it were the most important thing we'd ever made. The result? Something you'll have to see to believe. Pity this is radio. See the new award-winning Dell XPS 13 at dell.co.uk. Every little thing is everything.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
And good morning, I'm Karen Moscow, along with Tom Keene and Paul Sweeney. And the S&P 500 is lower at the open. It's down 0.5% on 11 points at 2459. The Dow Jones Industrial Average down 0.5%, down 101 points to 20,846. And the Nasdaq's down 0.33% on 26 points at 7332. 10-year Treasury down 1/32nd, yield 0.58%. The yield on the 2-year 0.22%. NYMEX crude oil is up 9.1%, up $1.87 to $22.18 a barrel. COMEX gold is up 2% or $31.90 at $16.2320 an ounce. The euro 1.0871 against the dollar. The yen at 107.31. Tom and Paul.
Karen, thank you so much. Paul Sweeney and Tom Keene with you folks on, I said it a week ago, an historic day, and it's ever more historic. Again, to put this in scale, 3 million jobless claim last week, 6 million this week, way above what anybody was looking for. Stephen Stanley at Amherst Pierpont rounds it out to 10 million, as I did earlier. He makes clear he was stunned at the jobless claims in states that were not virus infected. I thought, Paul, the Steve Stanley note was really, really quite good.
Yeah, absolutely. Just extraordinary here, Tom. Yeah. Brent Schutte, Northwestern Mutual Chief Investment Strategist, joins us now, Tom. So, Brent, just, given your experience, put that 6.65 million, or let's round it up to 10 million, as Tom just did over the last 2 weeks, Brent. Put that into context and how that kind of colors or frames your outlook for the markets. Oh, maybe we don't have Brent, Tom. We lost him. Okay.
Brent Schutte. That happens.
Okay.
We'll try to wire up with him again.
We're all all working remotely from all over the place.
Paul, I was just talking with our producer, Rich Truman, about this. The only thing I see here, understanding that Washington programs are too slow with no, disparagement towards Republicans or Democrats, is to waive rents immediately, waive landlord bills and obligations immediately, wait till the pandemic's over, knowing that it will be over, and then sort it out later. I don't see any other way.
Yeah, I think, that very well might be something that's needed, Tom. These are just extraordinary times and extraordinary measures, perhaps.
It's not like a financial crisis where you really don't know when it's going to end. We know it's viral. We know it's medical. We know it's going to end. And just waive it, waive it all. The taxpayer obviously picks up the interest bill. I get that. And maybe the rich don't get as much benefit as the middle class, the working middle class, and indeed the poor, who are hugely struggling now. But just waive it. Just make a federal law that we waive it, and the president can take a victory lap with Speaker Pelosi and Senator Schumer and the others. But just waive it. And move on to the end of what we're seeing beneath us here in Central Park, which is very tangible. Why don't you bring in our good guest here? I believe we've got Mr. Schutte.
We have him back. Brent Schutte, Northwestern Mutual Chief Investment Strategist. Brent, thanks so much for joining us. Tom and I were just talking about the jobless claims over the last 2 weeks, approximately 10 million jobless claims filed. How does that color your framework for kind of the markets going forward?
Sure. I think that just shows how deep the hole is that is being created by this coronavirus. And so I heard you talking about some, I believe, fiscal relief before. And I think that's why that relief plan is so large and so important. And so I kind of think about the economy right now as had been moving up, and then we had this sudden valley be created. And what fiscal policymakers and monetary policymakers are trying to do is to fill that valley with as much liquidity as cushion and safety nets as they can, so that when we get to the opposite side, Tom mentioned the virus having an end date, that the climb up the other side isn't so steep. And so this relief plan will not create GDP or not replace all the GDP that's lost. But can you bridge the consumer between what they were before, which is in a good position, and to what they'll be afterwards? And so that climb up the other side is not so steep, and that the economy can accelerate.
I love that idea, and I totally agree with you. And does it mean, I'm not going to ask you, are we going to get back to Dow 29,000 by New Year's Eve? That's inappropriate. But, Brent, I look at where we are now with these claims, and with the statistic as our great team put together, that Pennsylvania has seen 12% of their nation, their state, file for claims here. I mean, these are, and that's the highest, folks, that we've come up with. I don't want, it's a little bit inflammatory, but the immediacy of this, Brett, I think is not understood by Washington.
Yeah, I don't know about that. I mean, I think about how quick we got to where we are today with that financial relief package from both the Fed and the government. And it took a couple of weeks versus it taking 80 weeks or so, or a year and a half during the great financial crisis. And so I think they did learn during that, from that crisis, and they've learned to go hard and to go fast. And certainly it's not all out there yet, but it is beginning to work. At least it's beginning to put money in people's pockets, and those checks should be on the way. And so, you mentioned the end date to this. I think that's the key. How does the virus progress, and what can we do about it? So I think about this in terms of markers and milestones. We kind of have an economic plan about how we're going to operate for the next couple of months, and it could get bigger. Now it's a question of, can we turn the tide on the virus, and when is that ultimate vaccine going to be in place? And I think the news last night from Dr. Fauci was pretty positive. And as you think about that uncertainty, if you can start putting an end date on that, that gives Wall Street more certainty, and that should push the market higher at some point, even before the economic data actually probably starts to get better.
So given that backdrop, Brent, how are you kind of thinking about your outlook for the markets? What are you telling your clients?
Well, first of all, I'm telling them not to trade because I don't think you can trade a market that moves 9 to 13% per day. That's someone else's game. There are plenty of people who try to trade short term, and I think the key to this is looking through it in some way, shape, or form and not reacting right now. We all are taught that we're not supposed to panic when others do, and we're not supposed to say this time is different. And yet that becomes incredibly hard during times like these. I've seen it 3 or 4 times in my career where the temptation is high. You know, people call me and say, well, why shouldn't I just get out right now, wait a couple months, and then get back in? I just don't think that's doable. And so, I think the course for a normal investor, a long-term investor, is to stay the course.
This is really important, folks. This goes back to a company called Capital Guardian Trust in Los Angeles. They had a fund called Investment Company of America years ago, and they showed decisively, rigidly, mathematically, formally, Brett, that the whole log normal thing is not getting out of the market. That's easy. Go to cash. I'm good at that, Paul.
That's
the whole thing is, how do you get back into the market? For those listening, Brett, that are out of the market, how do you mentally get back into the game?
Well, I think you got to start putting it back to work. So if you're in cash right now and you have some money to put to work, I think you should start putting it to work, knowing that you're probably never going to actually hit the bottom. And so I've heard a lot of chatter about this being more akin to October 2008. So that was the talk last week, because we had that bull market. For those of you who are tempted to get out, we had a bull market within 3 days. And people are saying it's not the bottom, wait. My comment would be, one, that the consensus is almost always not right. So that actually gives me some solace, because that means that people may have to actually run back in to catch this thing. And 2, I just think that even if you bought in October 2008, you were still happy 1, 3, 5, and 10 years from now. And that's the time period that you should be buying stocks for. And so you're never going to pick the absolute bottom. That'll happen someday when the virus turns. But you should start putting money to work, and yourself in the future will thank you. Thank yourself today at some point for what you did, a few years ago. So if I'm brave enough to look to the other side, Brent, what are some of the sectors I should be looking at? Do I go to the ones that have really been crushed, the hotels, the casinos, the cruise lines, or do I just stick with some, big cap growth stocks that have worked for me in the past? I think the answer is a little bit of all the above. And so I hate to bring it back to diversification because I know it's not as fun to talk about. But I guess the one thing that I would tell people is that each and every one of these recessions, these crises, has different outcomes in the future. And so society shifts. If you look at an asset allocation chart, if you look at different graphs, the winners from the prior 10 years almost always don't end up being winners from the next 10 years. And so I wouldn't want people to be drawing trend lines forever into the future about what has just worked. So, for example, large cap U.S. stocks have worked. At some point, U.S. small cap stocks are so much cheaper right now than large caps, and they typically do better coming out of a recession or a downturn. And so I wouldn't want people to ignore those asset classes that haven't worked, just because I do think those are the ones that will probably lead you out. And I'm not telling you to run all into airlines and cruise ships and whatever else it may be. Society will shift. But I do think maintaining diversification and not ignoring asset classes that haven't done as well is good advice.
What do you do with oil? What do you do with energy companies? It was 142% of the S&P in 1985. I'm kidding, folks. And now we're single-digit exposure. Do you even waste your time with hydrocarbons?
Yeah, I think you still have to have some exposure. Think about 2007, 2008 going into that recession. A lot of what happened there was because oil was in short supply, right? And energy companies had done pretty well, and then we kind of solved that. And so that kind of goes back to my comments about not drawing trend lines forever into the future, because society does shift, and typically what is in short supply going into the recession becomes in more ample supply afterwards. And so I don't think you should ignore them. I don't follow individual stocks, so I don't know if I can comment specifically on those. But still maintaining some level of diversification is still important. And I do think at some point in this economy that you will have inflation again, which typically inflation is caused by some level of commodities or oil prices. And so I don't think inflation is dead. I think this actually cements the fact that we'll actually get it in the future.
Very good. Thank you so much. Brett Schutte, Northwestern. Greatly appreciated this morning. There's much more to come here, folks. Lots to talk about in an eventful week. Right now, with the news in New York City, here's Michael Barr.
Thank you very much, Tom. Paul, political opponents, scientists, and newspapers are attacking British Prime Minister Boris Johnson over his government's broken promises on testing for the coronavirus. The UK recorded its highest number of deaths in a 24-hour period. The Prime Minister, who is self-quarantining at his London home, has promised his government is ramping up testing.
We're also massively increasing testing. And I want to say a special word about testing because it is so important. And as I've said for weeks and weeks, this is the way through. This is how we will unlock the coronavirus puzzle. This is how we will defeat it in the end.
Spain reported a record 950 deaths in 24 hours, even as its infection rate appeared to ease. The number of coronavirus cases continues to climb across the U.S., and the virus is impacting people of all ages. Nicole Buchanan of Fort Myers, Florida, lost her husband, who was 39, to the virus, and says she didn't even get to say goodbye.
We thought that I was going to get to go in with him, and when I walked up to the doors, the hospital's on lockdown. They wouldn't let anybody in. After that, that was it. I never got to say, I love you, nothing.
In New York State, deaths doubled in just 72 hours to more than 1,900. The grisly murder of American journalist Daniel Pearl by terrorists in Pakistan shocked the world in 2002. It ushered in a terrifying culture of death by al-Qaeda and later the Islamic State. There are still questions about who murdered Pearl, but the 4 Pakistani men convicted of being involved were acquitted today. Global news, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael, thanks so much. Paul, just an extraordinary day, and really we see it dampening to markets right now, looking at the Dow down fractionally, but that is after we were up exceptionally earlier. Those claims have shocked the markets, haven't they?
I think shocked is absolutely the right word, Tom. 6.65 million, just well above anything that the street had been forecasting, and double what we saw last week. So just giving the market a whole new framework of how to think about how the economic impact will evolve from here.
Red and green on the screen. I go right to the world of Damian Sassower. The dollar not only up, but really putting it on. DXY out over 100. That's like a Dow 10,000 kind of thing as well. Looking at yen churning, euro yen showing strong yen over euro. Stay with us through the day. Again, Vice President Pence at 12 noon. This is Bloomberg Radio.
Business management to be a contributor to a company. The distinct mission is to...
This is a Bloomberg Pursuits look at luxury. As the coronavirus pandemic grinds dining, hotel, and retail sales to a near halt, Neiman Marcus is extending its store closures until at least the 30th of April and will furlough a majority of its around 14,000 workers in the coming weeks. Meanwhile, Macy's says a majority of its 130,000 employees will also be affected, minus a minimum staff to run digital operations and maintain its distribution and call centers. In sports, as Italy's soccer stadiums remain idle, Cristiano Ronaldo and his teammates will take a pay cut equal to the monthly wages of March, April, May, and June, some $100 million in total. A bright spot, quarantine life in Singapore, where residents from the U.S. and U.K. are being placed in hotels to prevent possible infections of their family. That could mean 2 weeks in a luxury hotel like Shangri-La's Rasa Sentosa Resort and Spa with meals and laundry, all on taxpayer dollars. I'm Andrew O'Day, Bloomberg Radio.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the favorites tab. Pretty easy, right?
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates. Not all heroes wear capes, but most wear tights. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis of the latest wrestling storylines, turn on the WWE podcast.
Big Steve-able edition.
Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
Because now on the show, everybody's kind of the same size, but as soon as I saw you, it's been...
For these and more, search sports and scroll down to the world of wrestling.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stocks are lower after a surge in unemployment claims underscored the pandemic's dire toll on the world's largest economy. Oil is rallying after China unveiled plans to boost its reserves. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 down 0.4% or 9 points to 2460. The Dow Jones Industrial Average down 0.7% or 155 points to 20,785. And the Nasdaq's down 0.6% or 43 points at 7316. 10-year Treasury down 1/32, yield 0.58%. The yield on the 2-year 0.21%. NYMEX crude oil is up 7.2%, up $1.47 to $21.77 a barrel. COMEX gold is up 2%, up $31.20 at $16.2250 an ounce. The euro 1.0854 against the dollar. The yen at 107.28. And jobless claims doubled last week to a record 6.6 million. The data indicating few sectors of the economy will be spared. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thank you so much. Paul Sweeney and Tom Keene on this day of horrific jobless claims and, of course, the ramifications to the American economy. As you know, we've been following for weeks here the deterioration of emerging markets, all that centering back to good interviews with internationalists, including our Damien Sassower. Right now, we speak to one of the great academics on this, Tobias Adrian, who's out of the London School of Economics and then the Massachusetts Institute of Technology. He has worked for the Federal Reserve System and now holds court in capital markets for Ms. Georgieva at the International Monetary Fund. Tobias, we're thrilled to have you on today. Let me begin with a fair, open question to you. What are you actually working on right now at the IMF as you monitor distressed emerging markets?
Yes, good morning. I'm happy to be on the program with you. We are working on helping our membership to take the right policy decisions in this very, very challenging environment. The International Monetary Fund has 189 members around the world, including the United States of America, and we're working closely with the finance ministries, the treasuries, and the central banks in order to find policy solutions for this crisis.
Right. Could you bring us up to date, before my colleague Paul Sweeney jumps in here, Tobias, can you bring us up to date right now on the actual dollar flows? Is it waves of dollar shortage? Is it a new tranche of dollar shortage? How would you describe that dynamic?
Yeah, there's a dollar shortage around the world as investors have reallocated from risky assets to safe assets such as treasury securities or cash. And so they've sold risky assets around the world, and that includes many sovereign and equities from emerging markets, for example. So emerging markets, but also advanced economies around the world are scrambling to get dollar funding. And the Federal Reserve has taken a number of steps in order to make this dollar shortage around the world less.
Tobias, right now, what are the countries or the areas that are the most concerned to the IMF?
This is a very unusual crisis in that it is a completely global crisis. Every continent and nearly every country is hit by this pandemic. We are very worried about the medical situation in many countries, and there is no end in sight yet, unfortunately. The pandemic and the medical crisis is triggering an economic crisis in the vast majority of countries around the world. There are very, very few countries that are excluded from this crisis.
Tobias, compare and contrast this with 2009 and take us back to Vice Chairman Fisher's work at the IMF and his iconic text that came out in 1998 after that financial crisis. There's the Dornbusch-Rogoff work on the value of floating currencies. Is there enough malleability and elasticity out there to withstand the shocks that are coming, or is it still too many rigidities so you people are really ready to come in on a crisis?
So the IMF is ready to come in and help the membership. We have $1 trillion balance sheet to help countries that are in dire need of financing. And we have started to deploy that balance sheet around the world. Having said that, today, countries around the world are in better shape than 10 years ago in the global financial crisis because banking systems are better regulated. There's more capital and more liquidity in the banks. And most central banks have much larger FX reserves than they had 10 years ago.
So, Tobias, that's kind of where I wanted to go. Give us your sense of, kind of the overall health of the global banking system here. Do you think, this crisis is unlike anything we've ever experienced. How do you think the global banking system